And here are your top stories. Slowing down, Jay Powell says more hikes are coming, but stocks and bonds jump as the Fed signals an end may be in sight. We look ahead, of course, to the ECB and BOE decisions today. The crisis deepens for Adani as shares and bonds sink, hitting $103 billion. Citigroup Wealth becomes the second to halt margin loans on Adani securities. Plus, a slew of bank earnings this morning. Deutsche Bank misses while Santander beats. We hear from both this hour.
Tom, this is a look at the futures. So we heard yesterday from Jay Powell that they have made progress in their battle against inflation. That was taken as a positive. Also, we had what were construed as dovish comments from Jay Powell. We had a rally in Wall Street, and of course, it's filtering through a lot of things here in Europe.
He did sound pretty upbeat. He sounded pretty optimistic. And as you say, he didn't push back on that key question around loosening of financial conditions. Yes, he flagged another couple of rate hikes, probably around the 25 basis point mark. He also said he doesn't expect to see a cut later this year, but he did sound optimistic and again didn't push back on the concerns around loosening of financial conditions. Is this a Fed then that wants the market to be second guessing? So far, the market's response is risk on, and that continues again today. The Spanish IBEX up 0.5%. Here in the UK, the FTSE 100 gaining 20 points as we look ahead to that Bank of England decision, of course. And over in France, the CAC 40 gaining 0.5%. Let's switch it over and see how things are playing out cross-asset then, because you had that significant rally across the yield curve yesterday on bonds. Yields came in double digits, and we see that continuing as well today. Just to move lower by 1 basis point on the benchmark 340. You're getting close to 4% on the 2-year, by the way. Futures on the NASDAQ looking to further gains of 0.9%. 13%, at least 13% is the gain for the NASDAQ year to date. So tech rallying, the Meta story was a big part of that as well. We'll break that story down for you later in the hour. The single currency, euro dollar, 109. Not a lot of movement there. We'll see if the ECB and any commentary from Madame Lagarde does anything for the direction of travel for the euro, given that 50 basis points is priced in at this point from the ECB. The pound at 123 and 50 basis points is priced in. And 50 basis points is priced in there as well. A lot of movement for the pound. And again, we'll see if that adjusts. We're going to be speaking, of course, to the central bank governor of the BOE later today. It is, of course, central bank's bonanza today then. And we have Mark Cudmore on the Fed decision route today on the ECB and Danny Berger on the BOE.
We do. Fed Chair Jay Powell has warned a couple more rate hikes, Tom, are needed despite acknowledging progress on inflation. Now, that's after slowing the pace of tightening with a 25 basis point hike.
We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
Well, let's bring in our markets live managing editor, Mark Cudmore. I mean, he looked at the press conference and then went through also the language with a fine-tooth comb. What did they tell us, Mark?
Good morning, Fran. I think you're giving me way too much credit there. But to paraphrase the question that has plagued philosophers for more than 4 centuries, if a Fed chair makes hawkish statements in a market that doesn't want to hear hawkish statements, does he sound hawkish? And the answer is most definitely no. This was a dovish press conference. As Tom kind of indicated there in the headlines, he didn't make a big fuss about the fact that financial conditions have loosened. Instead, he drew attention to longer-term financial conditions tightening, and therefore that was seen as sufficient. He did also kind of open up the idea that there will be a pause. There was a word change from pace to extent, and that was seen to rule out the idea of 50 basis points and 75 basis points hikes from now on. Yes, of course, we're going to get more 25 basis points hikes. That was always the story. The market will continue to challenge that, but the Fed was never going to change that story. I think the net summary is, has the reaction so far been correct based on this kind of press conference, based on this policy? Absolutely right. It was marginally, definitely dovish, definitely bearish for yields, supportive for risk assets, perhaps because of that better environment. The one thing I'd throw out there to kind of leave lingering with our viewers for the coming days' data is that perhaps the pricing going into the meeting was what was awry. Should people have been pricing in so many cuts? Maybe not, but the marginal change was definitely dovish yesterday.
Okay, the market reaction rational. That is the call from our MLive managing editor, Mark Cudmore. Interesting to hear from Robert Burgess as well, describing this, saying if it's not a pivot, it's a pirouette from the Fed. Now, the European Central Bank meets in Frankfurt today for the first policy decision for that bank, that central bank of 2023. A 50 basis point hike is all but fully priced in by these markets. Maria Tadeo joins us from the ECB, live, of course, from Frankfurt. Maria, what are you expecting to hear then, given that the markets are almost entirely priced in around 50 basis points?
Yeah, and Tom, this 50 basis points hike today, very well calibrated, priced in, kind of very much baked into the market action. Today, we should do our due diligence and, of course, say that nothing is official until the European Central Bank publishes that statement today. But again, that's where the market action is. This 50 basis points hike today, almost fully priced in, as you say. And to me, yes, it is decision day, but it is in many ways a forward-looking decision day. It's not about February, but actually the action that could be to come in March. And that's why the press conference becomes so important today. Are we going to get a repetition, a reiteration of Madame Lagarde, the one that sounded very hawkish in December, and repeated and said, we're not going to pivot. The fight against inflation is not done yet, and therefore hint at another 50 basis points hike come March? That is a real question. Is this back-to-back, or actually will there be some nuance there that could potentially open up a debate going into March?
Maria, thanks so much. As ever, Maria Tadeo outside the ECB in Frankfurt. Be sure to follow the ECB decision right here on Bloomberg. The decision set to come at 1:15 London time, and then Christine Lagarde's press conference half an hour later. Also here, the Bank of England expected to announce its 10th consecutive rate hike today. Joining us now is Danny Berger outside the BOE. Danny, so if you look at the BOE, 50 basis points probably hiked in, baked in today. What happens after?
Francine, it's a lot of question, I should say, whether or not they can continue that hawkish pace. I mean, remember, they were one of the first to start this rate hike cycle, but the data does suggest that they can't relent yet. At least that's why the market is pricing in 50 basis points today. You have core inflation remaining sticky, wage growth, private wage growth data is at 7.2%, and we are going to be getting their quarterly review that is likely to show an upgrade to growth forecast. We didn't enter a recession most likely at the end of last year as had been expected. So going forward, if we get that growth upgrade, if we get changes to wage forecasts, to unemployment forecasts, that could be a hawkish tilt, that even though this market has started to price in 25 basis points worth of cuts, the MPC and Andrew Bailey could bat that down and say this rate hike cycle is alive and well. Of course, the important thing to remember here is that the MPC is as split as it's ever been. The past three decisions have seen a three-way split. The camps are divided, at least they were last time, between those who think the risk is over-tightening and under-tightening. Will they all move to one camp? Will they remain split? There are still a lot of questions heading into this decision.
Okay, the split, the forecast, and whether we see any pushback on the market pricing in a cut at the end of this year. Danny Berger covering the BOE for us today. Thank you. Don't forget, of course, to follow our live coverage of the Bank of England decision with the MPC decision set to be published 12 p.m. UK time, followed, of course, by that press conference. And at 4 p.m., we are going to be bringing you our interview with the governor of the BOE, Andrew Bailey. Coming up, we're going to get more on what to expect from these central banks and the market reaction to an optimistic-sounding Jay Powell from Mads Pedersen, Human Edge Investment Technology CIO and founder, how he is allocating in this new environment. This is Bloomberg.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody is talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
The top names in global leadership are on Bloomberg.
I very much support the idea of a stronger sovereign geopolitical European Union. Democracies should cooperate, and that they should understand that there is something we have in common: respect for the individual rights of men, being in favor of the rule of law.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority.
This is Bloomberg.
As growth forecasts are increasing and inflation is falling, will the European Central Bank make its fifth rate hike in a row? How high do rates need to go? Bloomberg Television and Radio brings you the breaking news from Frankfurt and detailed analysis after ECB President Christine Lagarde's press conference.
The central banks, and certainly the ECB is pushing this line, have got much more wood to chop. They've got much further to go.
Coverage begins today, only on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 10 minutes into the European trading day. Central banks, the central bank action continues with the BOE and the ECB today. If you look at overall what equities are doing, they're extending some of the rally that we saw in the US yesterday. Again, keep an eye on the Dani assets sinking further, but you can see European stocks for the moment gaining some 0.5% down.
Okay, let's bring in then for the analysis and the reaction Mads Pedersen, the founder and CIO of Human Edge Investment Technology. Good morning, Mads. If it's not a pivot, it's a pirouette. That's one line. What was your take on what we heard from Jay Powell? He sounded optimistic. He said disinflationary forces are starting to come to bear. But at the same time, he also suggested possibly 2 further rate hikes, and he pushed back on expectations about a cut this year. Do you believe Jay Powell?
Well, I believe that he managed to do a press conference without messing up things, which is a positive. I believe that he stayed in line with the message. And I think that there is a large possibility that he will not get the call right in 12 months. I don't believe that they're gonna hike 3-4 more times and stay at that level. When we see the amount of disinflation in the system, I think inflation will be under control, and the balance of risk speaks for moderating rates going into next year.
But Mads, so you believe that actually he wanted to sound dovish, or he didn't sound as dovish as the markets interpreted it?
No, I think he sounded dovish, and I think market saw through what he said. He just cannot change his view as fast as the data has changed recently. And the Fed is obviously faster moving than ECB, but they have difficulties catching up with the reality of the disinflation forces. So they have tried to position themselves, but they want to keep open the opportunity to hike a few more times, which they might probably do, hike one more time, but they're again a little bit behind the curve. And I think markets are right and prices in.
Yeah. And Mads, of course, that answer around financial conditions and not pushing back aggressively, if we do get a sustained loosening in financial conditions, does that push the Fed further from its goal?
No, it pushes the Fed closer to its goal. The goal of the Fed is to have a low inflation and a stable high growth, a solid growth at least. And we're getting closer to that with the very strong improvement in financial conditions we have seen. But yes, it makes it more difficult for them to keep hiking because they don't have the situation fully under control with the credit market. So it's not as obvious for them what to do. But we do see financial conditions loosen very dramatically, and that's why we have also been overweight equities for a few months and high yield. These things work dynamically together.
Mads, if you look, though, at the Fed fund futures, so they now imply even greater certainty of Fed easing this year. If that's what you believe, if you believe that the markets are getting it right, what are you expecting them to do? A cut before the end of the year?
It's we normally, if we get the direction right, we're normally happy. But I think this time there might be a chance that you couldn't actually get the direction right. But I think they hike once or twice more, and by the end of the year, they will moderate or keep it. But I think they would probably need to moderate interest rates a bit because we're at pretty tight levels if you also look at the housing market, which is important.
Yeah.
So I think we get a moderation later in the year. That's the most likely because inflation is coming down.
Mads, it sounds like you're leaning into this rally. What are you allocating when it comes to equities? What are you allocating around credit?
So in credit, we are very much overweight high yield. So half of the duration of investment grade or high grade. And in equities, we're overweight equities. We're very much overweight equities, fully invested. And we're allocating to, in our new fund, Edge Sustainable Growth. So it's a global equity allocation. We have typically, we have US equity overweight, and we have a very strong overweight of IT and of pharma. So we're focusing on the growth element, companies which make money and which will grow into this sustainable rally, and also into the world where everyone wants to grow back better or grow back green, or at least grow back clean.
Mads, I know we want to talk about the ECB and, of course, the Bank of England, but does a deepening crisis with the Dani Group makes you nervous about a systemic risk out there if there was a big margin call or something like that?
Well, I think we have a big margin call at the moment. It looks like that when you see the announcements from the private banks. If you cannot use the collateral anymore, I guess you have to put in something else as collateral. So I think we're in the middle of that. It's always a bit nerving when these things happen, but it seems like in the current environment, markets can handle it. But yes, it is something I also follow on a daily basis to see what happens. But it's not something we can invest on. I think it's generally healthy that people question intransparent balance sheets. That's what we have the analysts for, if for anything.
Okay, yeah, Mads, really interesting response to the Adani risk, or at least the systemic risk potentially out there. Let's circle back then to the central banks. Of course, they play a role in this with the tightening. And the ECB, what is the policy risk that you fear from this European Central Bank?
Yeah, well, I feel that they sit in a circle, look at each other, and try to be the one who's most prudent and hawkish in the room, and therefore they do 2 times 50 basis points when probably all what is needed is they keep the current level. They want to keep their jobs and they run this competition of being the most prudent and hawkish, and it's really, they're running after their mandate. It's not a favor for Europe.
All right, Mads, thank you. Sorry, go ahead.
No, the thing is, they are very happy we don't have a recession in Europe, so are we. But we should try to get some growth for the benefit of the people, for the benefit of the businesses. And growth in Europe is not very strong, and it will maybe accelerate to something pathetic in a global context to 1 or 2%. And they should not hold back a bit of growth just because there's been a global inflation shock. So they're not doing the right service to the European Union and not to the Monetary Union.
Thank you so much. Mads Pedersen, there, founder and chief investment officer of Human Edge Investment Technology. Now, we're also getting some breaking news out of Adani Enterprises. We've been following, of course, this very, very closely with the ups and downs and, frankly, the pretty shocking news yesterday. This stock, or the enterprise, is actually down some 20%, set to the lowest since March. We don't know what happens next, but we'll keep a very close eye on it.
Yeah, bonds, of course, have been selling off as well, and some of their lenders, some of their creditors asking for at least additional collateral. It is a story we will keep across for you. Coming up then, Indian billionaire Gautam Adani tries to assuage investor concerns. You can see he's failing to do that so far. After the company acts that record share sale, we will bring you the details then on these lines of the crossing and that reaction then from the head of this conglomerate. This is Bloomberg.
the innovation agenda is going full speed on mitigation. That's where, you know, there's 100 companies, Breakthrough Energy's funded. There's
by mitigation, you mean mostly energy. You mean everything to do with energy. You mean generation of energy. You mean batteries. You mean transport. You mean all of the new, and there's some renewables that are already traditional, but more that need to come out. So that's the package that you're talking about mitigation? Yeah. Or are you also talking about agriculture as mitigation?
Yeah, so every area of emissions, you know, the world tends to focus on passenger cars and electricity. That's not a third of emissions. And so the focus on the easiest third, you know, now 4% of new cars are electric, you know, so that's the field that we're furthest along. About 4% of energy generation is wind and solar.
Tuesday, President Joe Biden delivers the State of the Union address. Join David Weston and Bloomberg's top political reporters and analysts live from the Bloomberg headquarters in Washington, D.C. as President Biden lays out his plans to tackle the war in Ukraine, Congress's debt limit standoff, immigration, and more. And stay tuned after the speech as we break down the Republican response. Special coverage starts at 8:30 p.m. Eastern, simulcast on television and radio, only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Against our guidance for the fourth quarter, we're probably a little bit short on revenues, mostly in the investment bank, but against what was actually a record fourth quarter in our FIC business nevertheless. So it was a little bit of the froth in the very end of the year went away. We're still very pleased with the performance and don't see that as any signal about 2023. In fact, the momentum has really continued strongly into 2023.
Well, the guidance for this year is 28 to 29 billion in terms of top line revenue. Confident that you will hit 28?
We're absolutely confident. Look, we show in our investor materials, interest rates lift us by 900 million, nearly €1 billion. Just that alone, the rate curve coming through this year. And so
what could we get?
We don't have to do that much
what could we
in
get
the rest
this
of the
year?
business.
I mean, with the rates continuing to rise in Europe, what's realistic guidance for the market this morning for the year?
Well, look, it's the 28 to 29. We base our forecasts on the forward rate curve at this point, only a couple of weeks old. So we feel pretty solid on the guidance on the rate part of it. And the momentum in the business in terms of new assets, fee and commission income generation, and really the strength of the franchise gives us a lot of confidence about that revenue momentum.
Well, that was the Deutsche Bank Chief Financial Officer, James von Moltke, speaking with our very own Manus Cranny.
Okay, now the Adani crisis is deepening, with Citigroup's wealth unit halting margin loans on the Indian company's securities. That after Adani pulled its $2.4 billion follow-on share offer. Indian officials have reacted to the situation.
I think whatever blip is there on the stock market and whatever the on the stock market is not going to affect the overall economy. I'm very sure of that. We have a very robust regulatory system in the country where the regulators would be doing all that assessment. It's improper for me to comment on it.
India's tech and railway minister there on the Adani market moves. Let's bring in then Bloomberg's global business managing editor in Asia, Emma O'Brien. Emma, what else do investors need to know at this stage? It feels like a thread has been pulled and the whole thing is starting to unravel.
Yeah, I mean, it's hard to believe that this only started about a week ago, but since then, this Hindenburg research report has really ignited a sort of snowball effect when it comes to the Adani empire, and it appears as though they're bringing the reputation of India's markets and wider system along with it, given how tied Adani is to the government there, particularly Prime Minister Modi.
So, Emma, are there now systemic risks implications? How should we be looking at this and how it could affect, global Wall Street?
Yeah, look, I think there's a very high risk of that happening, despite what the minister says there. At the moment, I think it's definitely a very severe reputational hit for India. People look at Adani, they look at the allegations of fraud, of juicing the stocks there, you know, all the sort of allegations that were raised by Hindenburg, and they see that as reflecting on India and its regulatory systems, its markets, and even its economy, given how entwined Adani is with the ambitions of Prime Minister Modi when it comes to infrastructure, and given how involved he is in various industries like ports and aviation. So there's definitely that reputational hit there to what is a rising emerging market. Whether it becomes something more severe remains to be seen. I mean, if Adani is unable to raise funds significantly, then he can't fund those nation-building projects that he is so tied to with Prime Minister Modi.
And there, as you say, you're tying the politics to the growth impact of this group and the travails of it at this point. Just outline for us how significant this conglomerate is for the economy of India, and whether we expect any kind of government bailout. Is it too big to fail?
I mean, that's definitely been the impression when it comes to the Adani empire over the last couple of years. They've quietly sort of ingratiated themselves into many aspects of the Indian economy, based quite significantly on this relationship, which goes back many years to the state of Gujarat between Narendra Modi and Gautam Adani. So, I mean, he's in many parts of the economy. It's hard to overstate how key he is. He's not only key to what Modi's ambitions are in terms of building India, but how he's looking overseas, backing you know, port projects in Sri Lanka and key allies of the Modi regime. So it's a little bit like a house of cards that could come tumbling down if this erosion of confidence continues.
Thank you so much, Emma. Bloomberg Managing Editor Emma O'Brien there on very important questions we need to ask ourselves about Adani and the potential pitfalls.
Okay, a massive week, of course, and a massive day for earnings. Let's bring you up to speed on how some of the stocks are reacting to the numbers that have crossed the ticker. Deutsche Bank, and we had that CFO interview, of course, Manus Krani speaking to the CFO. It was a miss on the top line for Deutsche Bank, and you see the hit there, 4.5% to the stock down in the session so far. Santander was a beat, gains of more than 2.6%, and ING lower, despite the fact, this is the top line, that net income did beat in the fourth quarter for that Dutch lender, but you can see there a loss of close to 5%. Coming up, Shell sees a record jump in profits. High energy prices and natural gas play their part, of course. We're going to hear from the CEO. This is Bloomberg.
You've been an advisor to the President of the United States on infrastructure and manufacturing, but on infrastructure, you've been involved with the legislation that was passed not long ago. Why is the United States infrastructure so terrible compared to so many other wealthy countries?
I have been around U.S. politics like you for a couple of decades and have served a variety of presidents from the different parties. And the attitude in the United States is obviously to keep taxes low and keep the public spend under control. And the word control is interesting, but that stops forward thinking in in terms of planning, and therefore the short-termism around our fiscal policies has hurt us. I mean, in essence, infrastructure is a long-term return, and to get a long-term return, putting it into private hands is one way of doing it, but really the public side of life has to be willing to do the forward spend. The forward spend on airports and roads and EV charging stations has to come from the public domain. Now, raising taxes to spend money on infrastructure means you've got to trust the people doing the spending. And I think the public-private model is the way to go there, which is actually create an infrastructure bank that is US public sector owned, that has private sector matching funds. I think that sort of breakthrough has yet to occur in the United States. So where we go is tax and spend, which unfortunately one side of the aisle disagrees with.
Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to The Open. We are 30 minutes into the European trading day, and here are your top stories. Slowing down, Jay Powell says more hikes are coming, but stocks and bonds jump as the Fed signals an end may be in sight. We look ahead to the ECB and the BOE decisions. The crisis deepens for Adani as shares sink, erasing more than $100 billion in market value since the sell-off began. Citigroup Wealth becomes the second bank to halt margin loans on Adani securities. Plus, a slew of bank earnings this morning. Deutsche Bank misses while Santander beats. And on the earnings story, Francine has been speaking to the CEO of Shell. Fran.
Yeah, so this is the first time we speak to him, Tom. He's just been in the job for about 4 or 5 weeks, but he knows the company, of course, very, very intimately. They posted this record profit for 2022, so I asked him about the energy market.
It's a tight market, and this was all at the time when China was going through its zero COVID policy. And so what you will have going into 2023, of course, is the return of a significant appetite from China to take up gas. And therefore, I expect to see continued tightness in that market.
So what kind of impact do you think the China reopening actually has on oil and gas prices specifically?
I won't predict because there are multiple factors at play here. What you see is supply is indeed constrained for multiple reasons, some of them geopolitical, some of them simply an underinvestment in oil and gas for a long time to come. But you also have multiple plays on the demand side. We mentioned China, but of course, you do see some recessionary concerns as well that are bubbling, higher inflation, higher interest rates. All of that coming together is going to have its own impact. So too difficult to predict where things go. Our focus is to make sure that we deliver the value out of our very strong core businesses, our upstream, our integrated gas, our marketing businesses, and that's where we will continue to focus.
But overall, do you think that the worst of the European energy crisis is over? Is it going to get better from here, or could we still see a lot of price swings and upwards pressure on prices?
I would not declare the end of the energy crisis. I think we have a way to go. The amount of rewiring of energy flows over the past year has been huge, and we expect to see that continue into the coming months and years. In 2022, the mild weather in Europe, for example, has helped in reducing some of the draw on energy. At the same time, there has been a destruction in demand in certain areas, in particular in the industrial sector. So this is going to be a journey of years. And I would caution anyone who looks ahead and assumes that the worst is over.
Do you have an idea of where oil prices can go this year?
Once again, my focus is on trying to understand the macro and build a resilient organization that's able to respond. Where OPEC decides to go in the coming weeks and months, where the broader geopolitics plays out, where the broader economy and the demand in multiple regions plays out is anyone's guess. And so we try to build a resilient organization that's able to weather the lows while at the same time be able to return value to our shareholders in some of the highs, as we did in 2022. We returned $26 billion if distributions in 2022 on the back of what essentially was north of 35% of our CFFO. So that is where my focus and my organization's focus is.
Yeah, and I understand that's very clear, and you have to, of course, focus on Shell. But if you look at the European energy complex, what do you see the biggest challenge, and how can Shell help in that?
I think the biggest energy challenge is to move from what has been a strong dependence on cheap Russian gas to, in essence, multiple energy forms that Europe is going to need to be able to, one, ensure its security, and two, ensure its affordability, all while trying to drive critically improved sustainability, so lower emissions. So some of the challenges are around how to implement EU Fit for 55, a policy that's meant to accelerate the rollout of renewables. That's going to have to happen quickly, but there are some hurdles there. Permitting, for example, continues to be a challenge. There has been significant interventions, for example, with windfall taxes, with price caps and the like. Those sorts of interventions start to erode the investment stability, and that creates concerns for investors like ourselves and others. So creating an investment climate that is conducive, I think, is going to be the key focus for Europe.
And how does the Inflation Reduction Act in the U.S. actually affect your investment plans?
The Inflation Reduction Act, I think, is a good boost to both climate and energy investments in the U.S. There are elements of the plan that we don't necessarily agree with, but ultimately, I think the overall plan is one we strongly support because it will essentially incentivize significant capital going into the U.S. We continue to look at multiple opportunities there. For example, renewables, we look at areas like CCS, direct air capture, and others. And so it will definitely stimulate our interest to invest further in the U.S.
So that was the Shell CEO, Wael Sawan. Interesting. I mean, philosophically, Tom, it's a very difficult question. If you're an oil major, so you need to try and reap the rewards for shareholders for oil majors, so for the dirty fuel, but you also need to go through the transition. And so for the moment, they seem to be prioritizing shareholders, but he told me he was very committed, of course, to net zero.
Of course, yeah, the critics would say, why not take some of this money you're handing back to investors and shareholders and invest it more aggressively in the shift to renewables? Other critics, of course, would say that you could be doing more in terms of alleviating the pressure on households across this country. No doubt politicians on some spectrums of the political scale will weigh in on that as well in the hours ahead. The stock, though, currently getting 1.5%. And talking of the markets, the risk-on moves continue across the benchmark here, and gains of more than 1%, again, tied to the dovish interpretation around the Fed and its 25 basis point hike from Jay Powell. The UK, the FTSE 100 gained 0.6%. Futures in the US pointing higher as well. The Nasdaq is already up 13% year to date, and the optimism continues. It is, of course, a central bank's bonanza today, and we have Valerie Teitel on the Fed decision, Maria Tadeo on the ECB, Danny Berger on the BOE. Let's start then with the Fed slowing the pace of tightening then, Valerie, raising by 25 basis points and acknowledging that there has been progress on inflation, but saying more hikes are needed. The market reaction for some unusual, Valerie. Explain the rationale.
Look, we had no aggressive pushback on the cuts priced into the curve from Powell, and there was no real aggressive pushback on the easing of financial conditions that it caused. He didn't really seem bothered by the recent loosening of financial conditions that we especially have seen since the December meeting. And then he went on to welcome the disinflation trend that we have seen, saying that because we're seeing this disinflation trend at the same time the labor market is holding up still pretty well, that really opens the door for the possibility of a soft landing. And then also there was no reaffirmation of the hawkish December dots that we got. The market was looking out for that, and he didn't repeat it. He didn't repeat that the Fed funds rate was due to go above 5. And then lastly, when he was asked about did they discuss pausing, it wasn't a flat out no. It had been a flat out no previously. There were some hawkish comments from him. He did mention that a couple more hikes are in the cards. But look, the market is a forward-looking beast. They are seeing through that, and they know that the end of the cycle is clear, and that's a signal to buy risk and buy fixed income.
Valerie, thank you so much. Valerie Teitel. Maria, you're outside the ECB. There's definitely an intensifying debate on whether inflation is retreating enough for the ECB to cool off a little bit. What can we expect today and then in March?
Yes, and Francine, I think the question just really captures the zeitgeist here. We're in February, but a lot of the eyes and the attention are already moving to March. In terms of today, we are expecting that 50 basis points hike. A lot of this very well priced in, baked into the action. Going back specifically to that December meeting when Madame Lagarde sounded very hawkish and essentially put that hike on the table very explicitly. I think in the press conference, however, there's two big focuses today. One is, of course, a forward-looking guidance. Is this going to be a 50 basis points back-to-back, which takes us to March, or actually where there'll be more nuance in the language that points to a debate as to whether that 50 basis points hike in March, is also something we should factor. And then secondly, overall, we've had a huge week in terms of data, very confusing picture, headline inflation coming down, but it's pegged to inflation, core inflation still sticky there. So I wonder, how do they see it? That's something that will potentially come up a lot in terms of the questions.
Maria, I wonder how you're going to stay standing. I think we need an anchor for you. I'm concerned you're going to get blown away before this ECB decision. Maria, today on the ground.
I think we need
outside
two,
the ECB.
Tom. If I'm frank, I think we need two.
Yeah. Okay, let's make sure you are tied down to the spot for this important decision on each side. There we go. We'll get the producers on it. Thank you, Maria. Be sure, of course, to follow the ECB decision right here on Bloomberg. The decision set to come 1:15 p.m. London. And, of course, Christine Lagarde's press conference half an hour later. Now, the Bank of England is expected to announce its 10th consecutive rate hike after the Monetary Policy Committee meets later today. Markets will also look to Governor Andrew Bailey's economic outlook and whether he is going to signal a shallower UK recession than previously forecast. Joining us then is Daybreak anchor Danny Berger, who is covering the BOE for us today. Danny, what are you going to be listening out for?
It's all about when a downshift will happen for the BOE, because they have to at some point, right? They were one of the first to go. Tom, you said this is the 10th consecutive rate hike, but unlike the U.S., it is not clear that inflation is yet conquered and that it is starting to retreat. Core services, that is still very sticky, 7.2%. That's where we stand on wage growth inflation. And we're going to get the quarterly review today. That will likely show an upgrade to the growth forecast. So you put all those together, it is nowhere close to trending back down to their 2% inflation goal. So market says 80% odds of a 50 basis point hike. But of course, as always with the BOE, there is not a clear guidance on whether it will be that or not. This is a very split MPC. Some folks think that the risk is over tightening, that it'll ruin the economy. Some think under tightening will mean that they just will have to do a second round of rate hikes, which of course is something that nobody wants.
Thank you so much, our Danny Berger outside the Bank of England. Don't forget to follow our live coverage of also the BOE decision, with the MPC decision set to be published at 12 p.m. UK time. And then there's a press conference at 4 p.m. You can listen to part of our interview with Governor Andrew Bailey. Coming up, we had a number of major European banks reporting earnings this morning. Deutsche Bank, ING, Julius Baer, and Santander. So we'll discuss all of that next. And this is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO. I have a problem. I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. We are 44 minutes into your European trading day, and here is the picture. Risk on, a dovish interpretation from the comments from Jay Powell. The benchmark in Europe up a full percentage point. Futures in the US pointing higher as well. The NASDAQ up 1.5%. Meta is a factor, but is largely down to what we're seeing from the Fed. The NASDAQ is already up 13% year to date. This is the redhead crossing the terminal now, and the travails, the pain across the Adani Group. Adani Enterprises then, shares extending the loss to 30% in Mumbai. You've seen at least a $100 billion stock rout across the Adani Group, bonds sinking as well into distressed levels for some of those dollar bonds. So the pain continues to ripple across this conglomerate. We keep across this story for you, of course, Francine.
Now, Santander beat estimates as a Spanish lender got a boost from central banks cranking up interest rates. The Chief Executive Officer, Ana Putin, spoke from Madrid with Bloomberg's Anna Edwards and Mark Cutmore.
For 23, the outlook we're giving is that based on this track record of consistent improvement in profitability, but very important also on the strength of our global businesses that are driving a lot of the growth and tailwinds in Europe, especially also in the US, interest rate being higher, we think 2023 the macro will be very challenging. We think it's still difficult for the economy. It's not clear what's going to happen, but we feel confident with the guidance we've given of reaching over 15% return on tangible equity.
Anna, good morning. As you say, it's kind of a very positive story on the revenue, the profits there, but there is the growing cost issue. I believe you narrowly missed your cost-income ratio last year, only narrowly. Correct me if I'm wrong on that. Are you going to make it this year? Are you going to reach your target?
So cost efficiency is one of Santander's trademarks. When you compare us with peers, we're amongst the best. Actually, we believe improving our cost-income by half a point in a year like 22 is pretty good. We're below 46%. We're not at the 45 we said, below 46 is still best in class. Having said that, inflation is there, and so that's what we are guiding is a cost-income, 44 to 45. We have decreased costs by 5% in real terms across the group, so that's not a bad performance.
Okay, Anna Boton, of course, the chair of Santander, speaking to Bloomberg. That stock currently up 3.4%. Let's keep focused on the earnings news then. We have had, of course, a number of major European banks, as we see there, reporting this morning. Deutsche Bank also in the mix, ING, Julius Baer, and of course, as we have just heard from, Santander. To wrap it all up for us then is Bloomberg's finance reporter, Tom Metcalf. Tom, what kind of stands out for you at this point across this flurry of bank earnings?
Yeah, there's a lot of news out today, and for me, it's a very mixed bag. So fascinating to hear from the Santander chairwoman just then. And, the market's basically responded pretty positively to their results. They've been benefiting from these higher interest rates. Other side of the coin, Deutsche Bank, their traders missed, one of those more volatile businesses. And I think the market's also punishing them for big misses on costs, basically. And that seems to be the focus. Everyone's looking ahead. Can you keep a lid on costs as we move into a harder economic environment?
So is that why shareholders are disappointed?
I think so. You know, the traders at Deutsche Bank did miss, but they still were up 27%. That compares to, say, Wall Street, who are up 28%. So it doesn't kind of justify to me sort of the big drop-off. And it's probably more that they're looking at the bottom line, and there's been a few instances across the board where Deutsche Bank maybe had higher costs than expected.
So presumably addressing costs is going to be a continuing theme for these lenders. What else did you get in terms of the outlook that we've been hearing from executives at these banks further into 2023?
Yeah, well, you look at the provisions, and pretty much across the board, they're all up in their provisions as you expect. You compare it to last year's, in some cases, people were unwinding their provisions. So that's really the sense that, you know, and the banks continue to say, look, we're well positioned. We're not seeing, you know, we're not seeing lots of distress out there, but they are clearly kind of positioning themselves for some form of downturn among their loan books.
Tom, overall, if you look at banks in general, I mean, I know not all of them are created equally, but who's going to benefit from higher interest rates?
Well, I think you want a bank like a Santander, right? You know, we're in the UK, Lloyds, NatWest, who are very simple, very focused, and it's becoming pretty clear, you know, that that's what investors are really sort of valuing properly, basically. You know, the investment banks like Goldman Sachs or Barclays, which is a big unit, they might be churning out record trading revenue, but it doesn't seem that's being rewarded because it is such a lumpy business.
Yeah, ING, the CFO telling us as well that they, of course, have benefited a lot from that higher interest rate dynamic that he thinks is going to continue. Tom Metcalf, thank you very much indeed across all these bank earnings, giving us the overview, the analysis post some of those earnings here in Europe. Let's get the Bloomberg First Word News now with Alice Atkins. Alice.
Hi, Tom. The Fed has slowed its drive to rein in inflation, lifting its benchmark by a 0.25 percentage point to a range of 4.5 to 4.75%. However, policymakers say further interest rate hikes are in store as they debate when to end their most aggressive credit tightening in 4 decades. Chair Jay Powell says a lot of ground has been covered, but there's still more work to do. The stop route in Gautam Adani's beleaguered empire topped more than $100 billion as the week-long fallout from a report alleging fraud continued to hit the group's stocks. Adani announced it's abandoning a $2.4 billion share sale to insulate investors from potential losses, with the offer price well below where shares are trading. The company has strongly denied the allegations in the report. US job vacancies unexpectedly jumped at the end of last year. The number of available positions climbed to a 5-month high of just over 11 million in December, up from 10.4 million a month earlier. The increase was the largest since July 2021, with a jump in vacancies in accommodation and food services. Economists had expected job openings to decline. New research suggests thieves stole a record $3.8 billion worth of cryptocurrency last year. According to blockchain analysis firm Chainalysis, overall crypto losses increased from the $3.3 billion stolen in 2021. The report says sanctions on North Korea drove a surge in suspected hacking by the Asian nation. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alice Atkins, and this is Bloomberg. Tom, Francine.
Alice Atkins here in London. Thank you very much indeed. Just quickly checking in on the bond markets, given the rally that we saw stateside. So there is the catch-up play that you're seeing playing out for gilts, bunds and BTPs, but of course we have the BOE decision and the ECB later that could inject further volatility into these bond markets. The benchmark here in the UK, 321 basis points, 9 in terms of the yields moving in. German bunds 223, 4 basis point move lower, and Italian BTPs 420. That is a 9 basis point move lower. Again, central banks and the decisions later could add further volatility into these bond markets. For now, bonds are bid. Francine.
Yep, they are coming up. Meta shares soared on the back of its quarterly results. We break down the numbers next, and this is Bloomberg.
governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to the Open, everyone. 54 minutes into the European trading day. Not only are we holding on to gains, we're actually accelerating on the back of that rally that we saw in the U.S. after we heard from Jay Powell, more dovish than expected.
Yeah, and optimism within technology as well. Meta shares soaring more than 20%, on track for their biggest gain then in 10 years. After CEO Mark Zuckerberg announced plans to make the social media giant leaner, more efficient, and more decisive. And of course, they beat in terms of the sales as well, and the sales expected from markets. Here with us with the details then, Bloomberg Tech, Media and Telecoms reporter Tom Seal. Tom, Mark Zuckerberg then coming in, well, he must be relieved after this rally that he's seen. What was in the mix for Meta, their earnings, and what Zuckerberg had to say?
I think they had an annus horribilis in 2022. They've lost half of the value of their shares over that year, so massive jump yesterday, but it's still only a sigh of relief for Mark Zuckerberg. What was in the mix? They repeatedly hammered this message. It's a year of efficiency. We've seen over 10,000 job cuts, but he hinted that more are on the way, so beware if you're a middle manager. At the same time, they're still a growing platform in terms of users, which is remarkable. It's been around for, well over a decade. So
2 billion users.
Exactly, yeah.
So, Tom, overall, I mean, we talk about technology stocks day in, day out. They're very cautious. Are there pockets where we're going to see growth?
I think the biggest bet of risk and reward is AI, by the looks of things. And all companies are looking at it in different ways. With Meta, it's going to be recommendation engine AI. They're trying to make Reels as addictive and sticky as TikTok. Yet to be seen whether that's going to be true. Mark Zuckerberg also said he's interested in generative AI. This is coming up with images, songs, text, out of the ether, out of what's out there. And, he said he's interested in that as well.
Okay, Tom Seal, thank you very much indeed, breaking down the Meta earnings and what could be driving the growth going forward, AI, the ramifications of ChatGPT, etc. Checking in your markets, gains of 0.9% across the European equities, futures up stateside. S&P E-minis gaining 0.6%. That is it for the European market open. Surveillance Early Edition is up next. This is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compaq merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
Growth forecasts are increasing and inflation is falling. Will the European Central Bank make its fifth rate hike in a row? How high do rates need to go? Bloomberg Television and Radio brings you the breaking news from Frankfurt and detailed analysis after ECB President Christine Lagarde's press conference.
The central banks, and certainly the ECB is pushing this line, have got much more wood to chop. They've got much further to go.
Coverage begins Thursday, only on Bloomberg, your global business authority. From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Attention now turns to rate decisions from the ECB and the Bank of England later after the Fed signaled an end to more hikes may be in sight. We'll speak to the former Bank of England MPC member Michael Saunders in a special show, Bloomberg UK, in 30 minutes from now. Plus, the crisis deepens for Adani as shares sink, erasing more than $100 billion in market value since the sell-off began, while Citigroup Wealth becomes the second bank to halt margin loans on Adani securities. Let's check on the markets. The focus is the Fed rally that we saw really initiated, not at the beginning of the press conference, but towards the end of the press conference when, of course, Mr. Powell was talking about financial conditions and also deflationary pressures. So this rally in Europe is actually continuing. He did say the central bank had made progress in its battle against inflation. So we also look at the treasuries. We haven't seen huge moves since yesterday, but something to keep an eye on. And then a little bit later today, of course, it's the turn of Christine Lagarde and the Bank of England. The main question, which a lot of investors for the FTSE and, of course, for the CAC and other major European benchmarks want to know is, okay, if they hike this time, what does that mean for March and going forward? When's the pivot for the Bank of England and ECB? So Fed Chair Jay Powell has warned that a couple more rate hikes are needed despite acknowledging progress on inflation. That's after slowing the pace of tightening with a 25 basis point hike.
We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
Well, we're now joined by Georgina Taylor, fund manager of multi-asset at Invesco Asset Management. Georgina, thank you for joining us. So the first thing I read when I come in, especially after Fed decision, is John Authers. He argues that it was a mistake for Jay Powell to be so dovish. Do you agree?
Good morning. Thanks for having me. I do agree, actually. I think that maybe it wasn't how dovish he seemingly was, but maybe how the market is interpreting it. And, you know, a couple of data points suggesting the direction of travel is right is very different to saying the Fed put it back in play and they will react very quickly with just a couple of more data points to suggest that inflation is coming down. And I think the jury really remains out on, you know, what level of inflation is acceptable, what level of inflation, and particularly what data points emanating from the labour market will be sufficient to say, you know, that battle is won. I think that's still ongoing. And we certainly think the rhetoric around central banks, the uncertainty, the reading, you know, and trying to extrapolate all this data on a forward-looking view is going to underpin, you know, a lot more volatility for all of us.
So, Georgina, do you think this is what the markets wanted to hear, or you know, Jay Powell wasn't on message and on target?
I think it's more that it's what the market wanted to hear. I mean, what's so interesting at the moment is that we do still seem to be anchored in the previous investment regime. So any suggestion that, again, the Fed put is back in play, that central banks will ride to our rescue once again, the market really grabs hold of. And it's something that we understand. It's exactly how we've invested over years and years and years, that feed through mechanism from lower rates, and that will underpin a low discount rate, and therefore risk assets look great value again. It does worry me a little bit, because I think the investment regime has changed. We are in a higher interest rate environment, and maybe central banks don't have that flexibility just to kick back in terms of lower rates going forward. So it's not a disaster by any means. It's not saying that the economies are collapsing around the world, but it's just to say, you know, that battle isn't won yet, and there are some growth risks out there still. And so there really is this tightrope that central banks continue to walk.
So, Georgina, what does it mean for how you want to invest in this kind of market? So are you expecting a correction in certain assets or certain classes where you want to get ahead of?
I think as we transitioned into this year, we really felt that those growth risks would come to the fore. I think what's happening really is that we're getting a slow drip feed of news flow. So it's not necessarily going to be the dramatic sell-off in equities, for example, as we reprice growth risk. It's just this drip feed, which just might mean we don't make much progress. So for us, from a risk asset perspective, we prefer credit, because we feel at least you're getting the income there. The balance sheet risk is arguably lower than what we've seen in previous economic slowdowns, so maybe you get a bit more protection in credit. And then we look at relative value opportunities to say, well, maybe it's more about buying one market versus another to really look at the winners and losers in this type of environment. But at that risk asset level, certainly more credit than equity, and looking for our kind of select opportunities elsewhere.
What does this deepening crisis with Adani mean for bonds overall, Georgina? At this point, do you need to try and look on whether it's a systemic risk, or do you just ignore it for now?
I don't think you can ever ignore these situations. I think, you know, we've been discussing whether it's a short, sharp shock and it gets dealt with very quickly, or whether risk premiums have to come back into markets, because it's a reminder that under the surface there are some of these risks, be that, you know, specific risks, but also obviously in this situation there is a link back to fiscal and government risk as well. So I think, again, it reminds us there's been quite a story around emerging markets, for example, and whether that's been the place to be versus other markets. And I think that just challenges that slightly to say, what is the right price and what is that risk premium that should be embedded in these markets? So these are all things that we're grappling with as we move into the new year, alongside the central bank narrative. So I think it just, you know, it's a reminder that volatility remains.
And I like also, amongst your you know, most important calls, so you prefer credit to equities, which you've said you also expect sterling to remain weak. What are you expecting from the Bank of England today? They seem to have an even tougher job than the ECB and the Fed.
A much tougher job, and I think they will hike today. You know, I think that's pretty much baked in terms of 50, but the difference is whether they can turn dovish more quickly. And for us, you're right, the mix is not very nice. We've got the inflation risk is there, the growth risk is very obvious. I think at the margin, I think they have tolerated higher inflation, you know, if a growth risk really is coming through, and probably that's clearer in the UK versus somewhere like Europe, for example, where I think they're really going to very strongly stick to that inflation mandate and remain more hawkish. And so, again, looking at the risks and looking at, you know, interest in the UK, we've got quite a complicated mix of kind of growth risks and inflation risks right now. So I think it just keeps sterling on the back foot. So we've got quite an interesting one looking at, say, the yen versus sterling, and looking at some of these different currency crosses. So, yeah, I think it's the dovish tone that will be quite different from the Bank of England versus elsewhere.
And you also believe, you know, it's the time to buy strong balance sheet companies. Given the earnings season that we've had so far that we're looking at, how will it play out?
Yeah, I mean, I think you know, we are in a higher interest rate regime. I think that doesn't change. And under the surface, in pockets, debt levels have been rising, and there are areas of the market which are very vulnerable to variable rate, you know, debt profiles going forward. So for us, that's concentrated in the US in this particular thematic that we have in the portfolios, and just focusing on, yeah, stronger balance sheet companies versus elsewhere. And it's been doing very well as a theme, and we just think it'll do even better now out as we embed and think about, well, what did this higher interest rate profile look like going forward for the corporate sector? So again, thinking about the world much more thematically, it crosses all sectors as well, as opposed to thinking in silos of sectors or even styles. That strong balance sheet theme is something that we think can continue to do pretty well.
Georgina, thank you so much. Georgina Taylor, fund manager of multi-asset at Invesco Asset Management. Now, coming up, we're counting down the ECB decision day. We're live in Frankfurt next, and this is Bloomberg.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody's talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Will a slowing economy finally hit the U.S. job market?
The real test for the bear case seems to be jobless claims.
We need wages to come down pretty significantly, and I'm just not sure that's going to happen.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Have we returned to pre-pandemic labor force?
You could see jobs go down to, say, sub 100,000 in the next couple of months.
That'll get their attention on Wall Street.
The January Jobs Report, Friday on Bloomberg Television and Radio.
The European Central Bank meets in Frankfurt today for the first policy decision of 2023. A 50 basis point hike is all but fully priced in by the markets. Maria Tadeo joins us now from the ECB in Frankfurt. So Maria, it almost feels like the market already looking ahead to March. So what can we actually expect today?
Yes, Francine, and a lot of this is what I would describe as a forward-looking decision day at the ECB, because that 50 basis points hike, as you say, is fully baked in. It has been for weeks now. A lot of this, obviously, as a result of the language used by the head of the central bank herself, Madame Lagarde, in December. The question is, what happens going into March? And that's when the press conference will be particularly important. Are we going to get a signal, be it soft or strong, that this is back-to-back 50 basis points from now, including March, or actually where there'll be some nuance in the language that could open up a debate from now until then? The other big point, which again will feed into this discussion, is how do they see the state of the European economy? And Francine, we've talked about it the entire week on this show, this whole string of data that we had. Inflation, headline inflation, yes, is down, but a lot of it is pegged to energy. Core inflation sticky. When it comes to GDP, a big debate out there. Can we escape a recession or not? That will be interesting too, and of course, heavily connected to the future path of rates going from here.
Yes, of course. Let's remind everyone. I know, Maria, you always remind us, your area, which grew to 20 members last month as Croatia joined. If you look at the data points that you were mentioning, GDP is not as bad as expected. We could probably avoid or have a very shallow recession if we don't avoid a recession. So does that point to more aggressive tightening because they can afford to, because the economy is not as bad as we were expecting?
Yes, and Francine, I'm happy you mentioned, of course, the GDP numbers, because the euro area did avoid that contraction at the end of last year, but a lot of that number was very heavily distorted by the Irish GDP. So the jury's still out as to whether or not this contraction will happen into this new year that's coming up. Now, when it comes to inflation, to remember, we did not get the print from Germany that was delayed due to a technical problem this week. We'll get it next week. So, of course, the data will be crucially important. I think that's why in this press conference, you will hear it repeatedly. Where do you see the economy going? And does it still merit the fight against inflation? Remember, no pivot from Madame Lagarde. Is that something that she will repeat? To me, that's the one sentence that I want to hear again, and I will be paying close attention to. Is this again, no pivot? The fight is not done. This is not hit and remove. It's hit and stay the course.
Maria, thank you so much. Our Maria Tadeo outside the ECB in Frankfurt, a bit windswept, but always on point. Be sure to follow the ECB decision right here on Bloomberg, with the decision then set to come at 1:15 p.m. London time. Christine Lagarde's press conference, half an hour after. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The stock rout in Gautam Adani's beleaguered empire topped more than $100 billion as a week-long fallout from a report alleged fraud continued to hit the group's stocks. Adani announced it's abandoning a $2.4 billion share sale to insulate investors from potential losses, with the offer price well below where shares are actually trading. The company has strongly denied the allegations in that report. U.S. House Speaker Kevin McCarthy says he and President Joe Biden can find some common ground on the debt limit after their meeting in the Oval Office. However, McCarthy says there was no agreement except to continue those discussions. The White House says President Biden also agreed to further talks to avoid an unprecedented default on U.S. debt. U.S. job vacancies unexpectedly jumped at the end of the year. The number of available positions climbed to a 5-month high of just over 11 million in December, up from 10.4 million a month earlier. The increase was the largest since July 2021, with a jump in vacancies in accommodation and food services. Economists had expected job openings to actually decline. New research suggests thieves stole a record $3.8 billion worth of cryptocurrency last year. According to blockchain analysis from Chain Analysis, overall crypto losses increased from the $3.3 billion stolen in 2021. The report says sanctions on North Korea drove a surge in suspected hacking by the Asian nation. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, we discuss the latest fallout from the Adani stock rout. So our interview with the ASK Group Chief Executive Officer. That's coming up next, and this is Bloomberg.
the innovation agenda is going full speed on mitigation. That's where, you know, there's 100 companies, Breakthrough Energy's funded. There's
by mitigation, you mean mostly energy. You mean everything to do with energy. You mean generation of energy. You mean batteries. You mean transport. You mean all of the new, and there's some renewables that are already traditional, but more that need to come out. So that's the package that you're talking about mitigation? Yeah. Or are you also talking about agriculture as mitigation?
Yeah, so every area of emissions, you know, the world tends to focus on passenger cars and electricity. That's not a third of emissions. And so the focus on the easiest third, you know, now 4% of new cars are electric, you know, so that's the field that we're furthest along. About 4% of energy generation is wind and solar.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
The Adani crisis is deepening, with the sell-off hitting more than $100 billion. As we watch out for risk of contagion, a senior Indian minister told Bloomberg TV that the country's economy is resilient and can withstand the rout caused by allegations against the company. Well, joining us now is Sunil Rokohale, the chief executive officer of ASK Group, one of India's largest asset and wealth managers. Thank you so much for joining us, Sunil. We want to talk a little bit about the large infrastructure outlay and, of course, the budget. But first, are you worried? Are you seeing clients wanting to take their money out because of what's happening with Adani?
Not really, because clients have been seeing, listening, and watching the development on this particular event. But this is just an event, to my mind, because there was a FPO and hence got more highlighted, which finally now got decisively concluded by the Adani management, and I think the issue is behind. And I don't think there is any run on money as far as the wealthy families are concerned.
Right, so you don't think there's something systemic that's dangerous? We see a lot of Wall Street banks no longer accepting that as collateral, but you think it will be contained?
I don't think it is going to be any more contagious as far as Indian investments are concerned.
Are you getting questions about it? Do clients ask you what that means for their portfolio? Or again, do you think that the situation right now is under control, even in terms of questions?
In fact, we had a much more larger event yesterday than this particular event, which maybe everybody is keen on globally. But the most important event for India was the budget, because we are a growth economy, and every time there's a budget, there are a lot of anxieties, expectations, and the direction of the government going forward. So I think the whole of the energy of the country is behind the budget at this point of time, frankly.
Yeah, and yesterday, actually, we talked about the budget quite extensively. I mean, the numbers behind it are pretty incredible. This is a huge, large infrastructure spending outlay. What does it mean for where you think the money should go? If you're an investor today, what sectors and industries will benefit?
See, this particular budget is largely, I would call it, is very growth focused. It is very progressive, and it is the budget which is basically focused on job creation and consumption led. So this budget has put in a lot of emphasis on the physical infrastructure. Almost 4.5% of the GDP is allocated effectively for the capex, which is going to create a significant infrastructure in the country, and then the jobs. So roads, construction, railways, anything to do with the physical infrastructure related industries are going to get immensely benefited. At the same time, railways, 2.4 trillion. is the first time India has seen in last 8-9 years almost 9 times of the budget of the 10-year back. We have got the budget now, which means a lot to Indian Railways. So those are the two things which are going to create a lot of jobs for long term. And the youth which is going to get employed is the skilled, unskilled, and the semi-skilled in the whole part, which is actually the biggest part of the budget. The second part of the budget is actually the digital part of the budget. So the digital part of the budget also actually is creating a digital infrastructure which is so important for a forward-looking India, which is going to lead the global growth now. So the 3 AI-based excellence centers, we have the one-stop shop of KYCs, digital lockers, digital data savings, which is going to be helpful. India has shown the world that how the fintech of India unified payment system is the best in the world, which actually now getting implemented in other countries as well. So I think a lot to do with the technology as well is going to be getting better.
How much foreign capital do you think India could attract because of this infrastructure push?
See, India as a destination has really emerged as an attractive destination. Last year, FY22, India has got $84 billion FDI investment. The next 5 years, the expectation is a $475 billion, close to $500 billion FDI, which is a long-term money which is going to come to India, going to stay here for long. And I think that is quite logical as well, because the growth rate of India last year, that FY23 projected growth is 7% of 7% GDP growth, which is anyway one of the best growth rate when the world at large is actually crying foul. Now, and it's going to be the same story going to be the next decade. So it is a golden decade for India in terms of growth cycle. India has become one of the prominent destination on a standalone basis in emerging market as an investment destination. And it is not a surprise that emerging market basket also India has now got a prominent percentage allocation as well. So very optimistic about it.
Thank you so much. The ASK Group Chief Executive Officer Sunil Rokohali there with some really interesting thoughts, of course, on the budget and on the Adani saga. Coming up on our UK special, the former Bank of England MPC member Michael Saunders ahead of today's rate decision. That interview is next, and this is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
The top names in global leadership are on Bloomberg.
much support the idea of a stronger sovereign geopolitical European Union. Democracies should cooperate, and that they should understand that there is something we have in common: respect for the individual rights of men, being in favor of the rule of law.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority.
Good morning, everyone, and welcome to Bloomberg UK, a news show with a special focus on the biggest challenges facing the British government, the economy, financial services, and markets. I'm Francine Lacqua here in London. Now, on the show this week, the BOE Day. It's here in the city. We'll discuss that with the former Bank of England MPC member, Michael Saunders. Also on the program, we'll have more from our interview with the new chief executive of Shell on the latest results for the FTSE 100 energy giant. Plus, we look at how Chelsea Football Club were the driving force behind a record January transfer window for the English Premier League. Now, the Bank of England is expected to announce its 10th consecutive rate hike today. For more, we're joined by Danny Berger outside the Bank of England. So, Danny, as well as the Fed, central banks in Canada, Norway, and Australia have also downshifted. Will the BOE do the same today?
Well, they have to at some point, right, Francine? I mean, they were one of the first to really start this rate hike cycle, but it's not clear that this is the meeting they will do that, just given how the data has been coming in. We've seen core inflation remain very sticky, private wage growth, that data coming in at 7.2%, and we're going to get their quarterly review today. We're expecting them to upgrade their growth forecast. You put all those together, Francine, that is not consistent with a picture that's moving back down to their 2% inflation goal target. So the market says 80% odds that we'll get 50 basis points today. What is the view forward? Again, all of this, as it usually is with the BOE, is uncertain. It is a very split MPC. For the past 3 meetings, we've had a 3-way split. How will it lean this time around? Again, the divide is between those who think the risk is over-tightening versus those who think the risk is under-tightening.
And of course, Danny, what we want to know is the pace of hikes to come. So how many clues will we get on that?
I think for this, the quarterly review will be very important. As I said, we're likely to get a stronger growth forecast. Given last time around, they did foresee us entering a recession at the end of last quarter. Growth was stronger than expected, so that will likely be a glass half full type of picture. But what they say about wage forecasts and unemployment, all of that will be key into seeing how they act going forward. The market at the moment thinks we're going to get at least 25 basis points worth of cuts by the end of this year. So we might have an Andrew Bailey that tries to guide the market away from that. It certainly will be a need for repricing in this bond market.
Thank you so much, our Danny Berger. They're covering the BOE today. Don't forget to follow our live coverage of the BOE decision, with the MPC decision set to be published at 12 p.m. UK time, followed by the press conference at 4 p.m. We'll bring you our interview with Governor Andrew Bailey. Well, we're now joined by Michael Saunders, former Bank of England Monetary Policy Committee member. Michael is currently senior policy advisor at Oxford Economics. Great to speak to you, especially on BOE Day. Is there a danger that because the labor market is so tight, even if we do have raising expectations in GDP, slowing inflation, it's going to be really hard to hit that 2% target?
I think we're past the peak on inflation, and actually the Bank of England are likely to cut their inflation forecast for this year and next year because of the drop in gas prices that we've had since their last forecast in November. And they'll probably also raise their growth forecast, partly for the same reason, and also that the yield curve is a bit lower. But I do think there's a risk that inflation will be quite sticky. Core inflation, getting back to the 2% target, is going to take a while. And for that reason, I expect them to hike 50 basis points today.
And then what happens after that? So again, if you look at it, I know it's almost a philosophical question, because you also need to take into account the tightening that you've done in the past. But do they need to be aggressive now and then cool off as we get into the summer months? or is it better to go gradually so that you see the effects of previous tightening?
Well, the MPC has now hiked quite a long way. Almost, I mean, if they do a 50 basis point rise today, that will mean that rates have gone up by almost 4 percentage points since late 21. So that's a big tightening cycle already. Look, I think in terms of judging the outlook for policy, assuming they do a 50 today, there are really three things which are worth focusing on. The first is the MPC do an annual survey of pay deals. This is done through the bank's regional agents who go out around the country talking to many firms. It's a very big survey. The MPC put a lot of weight on it. The survey a year ago said that pay growth would run at 4.8%. At that time, that was the strongest figure for pay deals that they'd had since they began that survey 15 years ago. And of course, that prompted the MPC to tighten. And we saw through last year average earnings growth repeatedly surprising on the upside relative to consensus expectations. Now they'll have the results of the new survey. They will come out in the monetary policy report today. I suspect they will show pay deals at least as strong as last year, perhaps stronger. In other words, 5 something, perhaps even 6%. And I think that will get the MPC worried about second round effects from the tight labour market and high inflation figures.
What does that mean for monetary policy then going forward?
Well, I think that's going to mean that the idea of a quick pivot from tightening to loosening, I think that's unlikely.
So the markets are wrong.
I think the market's just getting ahead of themselves for that. So first thing to watch for, as I said, is pay deals. No. The second thing is, what did the MPC themselves say about the future path of policy? So in the last few meetings, they said that they're prepared to act forcefully if they get more signs of second round effects, but also suggested that the terminal rate, the peak rate that markets have expected, is maybe too high. Now, that hasn't stopped them hiking rates pretty rapidly, 50s in recent meetings, even a 75 in November, because that guidance on the terminal rate, well, the terminal rate was a long way above where the actual policy rate was, so it didn't really constrain them. This time around, I would expect them to give clearer guidance that they are towards the end of the tightening cycle. Not necessarily finished, but near the end. And they may do that by referring back to the scale of tightening which they've done. But also I would look at their inflation forecast with stable rates. In other words, where will inflation be if rates don't rise further from here? That may well be pretty close to target, suggesting that not much more needs to be done.
But when you say that the markets may be getting it wrong, they don't believe that actually we can stay at this pace, even if there's not more tightening, for a long time. Where are you expecting interest rates to be in 2024?
Look, I think, let's assume they go 50 today, so that takes the bank rate up to 4%. Maybe a little bit more, maybe we have another quarter point or so after that. Maybe next year you might think about rates coming down a little bit, but I think it'll be pretty slow. One key thing to think about there is, before the pandemic, people used to think of a neutral interest rate, a normal interest rate, if you like, as being perhaps maybe at a high level, 2%. And probably a neutral interest rate now is higher than it used to be.
At what level?
I would guess 3 something. That's the kind of interest rate you should think of as being normal, neutral for coming years, neither adding stimulus nor disinflationary. Higher than it used to be, because inflation expectations have moved up over the last couple of years, and so you need a higher nominal interest rate in order to achieve the same level of restraint. So even if the MPC do start to cut rates next year, you shouldn't expect rates to be going back down to the very low levels that we saw before the pandemic. I think the days of ultra-low interest rates are behind us.
I was going to say, do we ever go back to those days, even if it's in 4 or 5 years?
Not for the foreseeable future. Those were exceptional conditions, very low global neutral interest rates, a long period of spare capacity, a long period of very low inflation. And I think having been through the pandemic, and then the experience of the last year of very high inflation rates, inflation expectations are likely to be persistently higher, requiring a slightly higher nominal interest rate.
We saw an uptick, actually, in the UK economy in November, which the bank had not forecast. Are there models that are broken that the bank should not be looking at, or should be looking at them differently?
No, I think the economy did slightly better than expected, it appears, in Q4. But I don't think this means that the fundamental assessment of the outlook is wrong. The UK economy has been hit by a big rise in energy prices. That's squeezing household incomes. The effects of that are coming through. Also a squeeze on company profits, many firms facing large cost pressures. The effects of that, plus the monetary tightening, is likely to cause the economy to go into recession during this year.
Is it harder to set policy? So we had the Fed yesterday, and we watched that press conference of Jay Powell. We have Christine Lagarde of the ECB today. Is it harder to set policy here in the UK right now, given all the confluence of events?
So the UK does face a combination of challenges, which in some ways are worse than either the US or the euro area. We have the high inflation, also you see that in Europe, driven by, in part by energy costs. But the UK has also had a drop in the labour supply, a drop in the workforce, because of a big rise in long-term sickness over the last few years. And that's reduced potential growth, and Brexit. And so the third thing I think that people really want to look out for today is the Bank of England do once a year an assessment of the economy's potential growth, what they call their supply stock take. They will publish the results of that. I suspect that's likely to show that potential output growth in the UK is low, 1.25%, below what we saw in the pre-GFC period, but also lower than we saw in most of the last decade. That's adverse demographics, Brexit, a gloomier view, I suspect, on workforce participation, and persistently low productivity growth. Now, the MPC can't fix potential growth, but if potential growth is low, they are forced to restrain the pace of the economy to match that low potential growth. That acts, if you like, as a speed limit for what the economy can achieve.
There are concerns that actually investors haven't really come back to the gilt market like they have in the past, foreign investors. What does the UK need to do to get that back?
Look, I think the bigger picture is what the UK needs to do, not just to get back gilt market investors, but to get back foreign investment into the UK. Right? The path of business investment in the UK has really stagnated since 2016, since the Brexit vote, and that's part of the reason for low potential growth in the UK, and with that, low growth of living standards. Now, I think that problem is becoming more widely recognised. As I said, the Bank of England can't fix that, but the government can. The government really needs to come up with a coherent plan for growth, a way of improving the supply side of the UK. So far, that's been lacking.
What would you do?
Well, I think there's a well-known script of measures. You look at the things which the OECD, the IMF, the experts have been saying. Closer trade links with Europe, higher public investment, more money on education and skills. These are the standard measures to improve potential growth. The extra thing in the UK would be fix the issue of NHS waiting lists, because that's probably part of the reason for this big rise in long-term sickness, which has reduced the workforce and curtailed labour supply.
Yeah, how do you fix productivity?
Education, skills, closer trade links with Europe, right? And none of that's easy. None of it, actually, I'd say closer trade links with Europe is a relatively low-cost thing to do. It wouldn't cost the country anything to do it, and it would yield relatively quick benefits.
Michael Saunders, as always, thank you so much for joining us. That was, of course, a former Monetary Policy Committee member at the Bank of England and now Senior Policy Advisor to Oxford Economics. Well, coming up, Shell's top boss cautions that we're not out of the woods of the European energy crisis yet. As the oil major reports bumper earnings, we bring you our interview next, and this is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years. since the compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
President Joe Biden delivers the State of the Union address. Join David Weston and Bloomberg's top political reporters and analysts live from the Bloomberg headquarters in Washington, D.C. as President Biden lays out his plans to tackle the war in Ukraine, Congress's debt limit standoff, immigration, and more. And stay tuned after the speech as we break down the Republican response. Special coverage starts at 8:30 p.m. Eastern, simulcast on television and radio, only on Bloomberg, your global business authority.
Supply is indeed constrained for multiple reasons, some of them geopolitical, some of them simply an underinvestment in oil and gas for a long time to come. But you also have multiple plays on the demand side. We mentioned China, but of course, you do see some recessionary concerns as well that are bubbling, higher inflation, higher interest rates. All of that coming together is going to have its own impact. So too difficult to predict where things go. Our focus is to make sure that we deliver the value out of our very strong core businesses, our upstream, our integrated gas, our marketing businesses, and that's where we will continue to focus.
But overall, do you think that the worst of the European energy crisis is over? Is it going to get better from here, or could we still see a lot of price swings and upwards pressure on prices?
I would not declare the end of the energy crisis. I think we have a way to go. The amount of rewiring of energy flows over the past year has been huge, and we expect to see that continue into the coming months and years. In 2022, the mild weather in Europe, for example, has helped in reducing some of the draw on energy. At the same time, there has been a destruction in demand in certain areas, in particular in the industrial sector. So this is going to be a journey of years, and I would caution anyone who looks ahead and assumes that the worst is over.
That was the Shell Chief Executive Officer, Wael Sawan, speaking to me a bit earlier. Now, the number of top earners at JP Morgan's Frankfurt division have soared since Britain voted to leave the EU 3 years ago. It comes as U.S. banks look to ramp up operations in Europe in a sign of how Brexit has transformed banking in the region. Joining us now is Bloomberg's finance reporter, William Shaw. Will, great to have you here. So how have some of the ranks there of JP Morgan millionaires changed from London to Europe?
So back in 2015, which was the year before the Brexit vote, there were absolutely no bankers with JP Morgan in Germany earning more than €1 million a year. By 2019, that number had jumped to 9, and by 2021, which is the most recent year for which we have data, it soared to 85. And in fact, there were 7 bankers there the same year that were making more than 3.5 million euros. There's a couple of different trends going on there. First of all, JP Morgan's German office has expanded to take in a host of other European countries. But secondly, because of Brexit, the bank has been shifting really well-paid traders and salespeople to cities like Frankfurt and Paris.
So how has Goldman's approach changed to doing business in the bloc?
So we've got something quite similar going on with Goldman. So in the 5 years to 2021, their headcount at their German-based office increased 7-fold to more than 900. Now, we should point out at this point that their London-based office, Goldman Sachs International, has got a lot more people, about 3,800, but that number has actually been in decline now for a couple of years.
So does it mean they've turned their backs on London?
Certainly not in a major way at this stage. I mean, if you look at London, it's still got an £82 billion trade surplus in financial and related services. About twice the amount of dollars are traded here
than are in the US. So in many respects, it's still doing well, but there are signs of a slide. So for example, starting from 2019, the UK's share in foreign exchange and derivatives, in euro-denominated derivatives, have all fallen about 10%. So major problems aren't showing up yet, but there are signs that all is not well.
So what does it mean for London as a whole? How much has it suffered because of Brexit?
I mean, London still has got a major allure for bankers. It's obviously like a very desirable city to live in. People like the independent schools. They like the cultural life. It's difficult to get people to move to locations outside of London without them quitting. But at the same time, there is an inevitable sort of gravitational pull from the European Union, being assisted by European Union regulators, to pull more people away from London. And I think that probably will continue.
Well, thank you so much, William Shaw there of Bloomberg. Now, be sure also to subscribe to Bloomberg's podcast. It's called In the City, and it's out every Thursday. That's today. Coming up, Chelsea's record-breaking January transfer window. We'll take a look at their big spending spree in the Premier League. That's next, and this is Bloomberg.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody's talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, Chelsea Football Club have smashed the British transfer fee record, paying over £100 million for the Argentinian midfielder Enzo Fernandez. Joining us now to discuss all of this is Leanne Gerrans. Leanne, I mean, this was huge. What a transfer year. Like, Chelsea set a record. We hope we win a couple of trophies because of it, because we've been doing terribly. But what can you tell us about the deal?
Oh, so Francine, the transfer window is now officially well and truly closed. And all I have to say is records were just smashed across the board. We heard about that deal that Chelsea made there for Enzo Fernandez. But I also just want to say that the Premier League clubs together combined spent £3 billion during the last two transfer windows, so during the summer and the January one. But let's get back to this Chelsea deal. £107 million for a 22-year-old player from Benfica. We must remember that back in August, he was actually bought for £10 million. He won the player...
That's a premium.
Yes, I know. He won the Young Player Award at the World Cup playing for Argentina when they won in Qatar. And how much of his value has gone up now? 107. There we are. But as you said, Francine, Chelsea still 10th in the league. Yeah. Graham Potter struggling. So they're spending all this big bucks, but where they're really getting.
So, but I mean, this is a more general trend. And of course I have, disclaimer, I'm a Chelsea fan, the only one in my family. I get a lot of hate because of it. So I'm watching this very keenly. But are we just becoming much more Americanized so that, more private equity bosses come in, they're just going to spend the big bucks?
So this is where we've really been looking. So as we do know, I was standing outside Chelsea. I don't know if you remember, but in March when that big transfer happened with Bowley and Clearlake when they took over Chelsea for all of those millions of pounds. And now we're seeing them really spend £500 million on players. So they are investing in the club massively. They've got so much money behind them. And it just looks like this big push to get big player names in. But Francine, as we've seen, this is just not pushing them up the league at all. Arsenal are still the league leaders. And they've actually just bought another Chelsea player for £12 million. And he's also a midfielder. So really, Francine, we have to see. And I know that I'm also a Chelsea fan. Can I say that too?
I didn't know. We should be in like Chelsea Blue.
I think
we're going to get so much hate mail.
No, we're going to get loads of hate. But it's important to just note that, big money's been spent on football. And like I said, it's record-breaking £3 billion during the last two transfer windows.
Huge, incredible money. Thank you so much, Leanne Gerrans there with the very latest on football transfers. Don't forget, of course, to follow our live coverage of the Bank of England decision, with the MPC decision set to be published at 12 p.m. UK time, followed by a press conference. And then at 4 p.m., we'll bring you our interview with the Governor, Andrew Bailey. Now, the picture is like this. We have a decision guide because of the Bank of England, but we also have then the ECB. There are 3 things that the Bank of England will want to make sure they communicate correctly. 3 things that you need to watch out for. One is market pricing, the statement language, so we'll be bringing you that press conference live and in full, and of course the economic outlook. Are they going to raise GDP expectations and lower inflation expectations? This is the big question, and will they hike 50 basis points? This is Bloomberg. Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
As growth forecasts are increasing and inflation is falling, will the European Central Bank make its fifth rate hike in a row? How high do rates need to go? Bloomberg Television and Radio brings you the breaking news from Frankfurt and detailed analysis after ECB President Christine Lagarde's press conference.
The central banks, and certainly the ECB is pushing this line, have got much more wood to chop. They've got much further to go.
Coverage begins Thursday, only on Bloomberg, your global business authority.
I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance.
First phase was get to neutral. The second phase, I think you could argue, was to get into restrictive territory. Now they believe they are going truly meeting by meeting.
It may take time for markets to get used to rates at this level for some time.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Markets rally even though Federal Reserve Chair Powell says more rate hikes are on the way. The ECB and the Bank of England are expected to raise rates today. Deutsche Bank's profit and revenue come up short. That's after debt traders' long winning streak comes to an end. And shares of Meta are soaring as Mark Zuckerberg promises a leaner, more decisive company. We will hear from Apple, Alphabet, and Amazon today. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, barely any time to look back at the really important stories of the Fed and Meta. We need to look ahead to the other corporate earnings from the tech sector and some big central banks reporting as well.
Yeah, this has been an exhausting week, and I can't believe it's only Thursday and we still have 2 days left to go with some really big potential catalysts, as you allude to. And of course, it also has been a busy week in Asia, specifically in India. I know usually I check across the Asian markets, but it's really India where I want to focus because the action is just so incredible when it comes to the Adani Group. It isn't bleeding through too much to Indian stocks more widely. The Nifty 50 is essentially flat on the day, but we are seeing massive losses for the flagship Adani Enterprises once again, down about 27% today after a 28% drop yesterday, which of course that drop leading the company to abandon its $2.4 billion follow-on shareholder and return money to investors. You also have Citi joining the likes of Credit Suisse yesterday and no longer accepting some Adani securities as collateral for margin loans. And you have some of the key debt trading at distressed levels. So it's really just pain that seems to be becoming more and more exacerbated across all of these different entities. Adani Ports and Special Economic Zones down another 7%. Adani Green Energy down 10% again. Over the last 5 days, we have seen about $100 billion in market value wiped off of the value of Adani's companies. Matt.
I am not exhausted because I am pumped. Wow, was that dovish yesterday? I mean, not only the step down to a mere 25 basis points, but you know, they're seeing disinflationary signs and they're really data dependent. So meeting by meeting, the S&P was up 1% yesterday in the cash trade. It's up 0.5% on the futures. Today, investors are buying bonds. That pushes the yield on the 10-year down to 340. We're looking at gold rising up now, 1957, the level there. And Bitcoin, which I was just about to drop from the boards because it was getting so boring again, starting to rise to almost 24,000 at 23,837. So the Fed gets dovish and risk assets rally. This is what we live for, right? I mean, this is the kind of, I don't want to say pivot, but dramatic turn that I think the markets have been betting on. This is why we've rallied so much from the October lows, Anna.
Right. I mean, yes, if you're not focused on the ongoing rate rises, and that was part of the conversation yesterday at the Fed, but the market, you're right, Matt, didn't listen to any of that. The market found what it wanted to find, and that was all of the dovish lines. And the lack of concern, perhaps, about financial conditions, that's certainly playing in here. European markets running with that theme, not questioning it too much and going with it, following Wall Street higher, essentially, here as we wait for the ECB and the Bank of England, but really responding to yesterday's rally on Wall Street. And there are some similarities. Tech stocks are doing pretty well today. That's because of some individual drivers around earnings. So Infineon, Dassault Systèmes, both reporting in the European tech sector. But really, it's that after-hours rally in Meta that's also lifting that sector too, and the Fed and that narrative also in focus there. These are some of the earnings stories that I picked out to mention to you. Santander is up by 4.5%, outperforming what is generally a quite lackluster performance from bank stocks today. But this business pleased the market with the profits it delivered, and the market not focusing too much on the so-called windfall tax. Some suggest it's that, although it is a tax on profits, tax on revenue. The chair of Santander was explaining to us earlier on. Shell PLC up by 1.8%. So this, the oil, the energy major business. Again, a story of beating expectations and increasing dividends and introducing a buyback. So reasons to be cheerful for Shell shareholders. DWS Group, this is the manager of money over at Deutsche Bank. And that stock, a worse story today, down by 4.9%. Outflows really in focus, even if the CFO told us earlier that it's the lower margin parts of the business that saw those outflows. The market is focused on that a little bit. And 109.95 as we wait the ECB then, Matt. It's been up to 110 earlier on this morning, as there now is this interest rate differential opening up. If we see the ECB go 50 when the Fed only went 25.
A divergence. This is what makes things exciting. And let's get to the Fed right now. Chair Jerome Powell acknowledged that the U.S. is in an era of disinflation with price pressures cooling, but he says there's more work to do.
We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
So he made a little move. Next up, the Bank of England and the ECB are going to deliver probably bigger moves. Today, we've got team coverage of Bloomberg's Valerie Teitel on the Fed, Danny Berger on the BOE, and Maria Tadeo in Frankfurt covering the ECB. Let's start with Valerie, though, to unpack Powell's comments. And he thinks financial conditions are tightening. I don't know what's wrong with his dashboard.
Look, I had to actually dig for a way to kind of explain how Powell is viewing the markets. This is the Chicago Fed Financial Conditions Index. This red line is what Powell is seeing. He's looking at the long-term tightening. This green line is what the markets are seeing. This loosening that we have seen pretty decently since the December meeting. But look, let's not get too caught up in that. What he is implicitly implying is that he does not need to tighten financial conditions meaningfully in order to have inflation fall quicker than forecast. And funny that we get their new forecast out in March. This tees us up perfectly for them to revise down their inflation forecast, revise down that dot, and pause in March. But look, that meeting is 7 weeks away. We still have a lot to go before then, including this Friday's payroll number. We also hear from Powell directly on February 7th. He is going to be speaking in Washington. What does he think about the market reaction after this press conference? And finally, it's not Valentine's Day, it's CPI Day. February 14th, we get the next inflation print. My eye is going to be on that core services ex-housing metric.
Ever the romantic, Valerie. Thank you very much. Please, Bloomberg's Valerie Teitel with a fascinating chart that you can find on GTV Go. We will try and get it into the chart bank for you, showing the tightening over the long term, the loosening in the short term of financial conditions. Now, over to the UK, the Bank of England is expected to raise rates by 50 basis points today. That will mark the 10th consecutive hike. Bloomberg's Danny Berger is outside the Bank of England. And Danny, the focus will be on, of course, whether we get that 50, but also the forecasts and the vote splits.
Yeah, I mean, look, with the BOE, nothing is ever a sure thing. It's been a very split MPC, so that, of course, leads to some question marks. It's been, for the past 3 meetings, a 3-way split. But look, the data has been coming in that suggests they can't relent yet. They can't downshift like the Fed yet. Core services still sticky. Wage growth coming in at 7.2%. And we're likely to see an upgrade to their growth forecast in the quarterly review. That quarterly review they're going to release today is going to be really crucial for trying to read the tea leaves in how they treat rates going forward. The market, remember, at the moment is pricing in at least 25 basis points worth of cuts by the end of the year. If we get a different unemployment forecast, if we have stronger inflation forecasts and growth forecast, we might be seeing an Andrew Bailey that tries to guide the market and tries to say this rate hike cycle, it is alive and it is continuing.
All right, Bloomberg's Danny Berger reporting from outside the Bank of England. Thank you so much. And now to complete the trifecta, the European Central Bank is also expected to hike by 50 basis points when it meets in Frankfurt today for its first policy decision of 2023. Let's get over to Frankfurt now. Bloomberg's Europe correspondent Maria Tadeo is there for us. Maria, how hawkish do we expect Madame Lagarde to sound?
Look, I think that's a big question, Kaylee, because when you look at the actual decision today, it is pretty much baked in, priced in by the market. It has been for weeks by now that today the European Central Bank will hike 50 basis points. To some extent, this is a forward-looking story, and this is why the press conference will be interesting. Are we going to hear a repetition, a reiteration of Madame Lagarde back in December? Remember when she said, this is not a hit and remove story. It's going to be a hit and stay the course story. The ECB is not going to pivot, and that would indicate soft or strong, doesn't matter, but it would indicate we're in for 50-50 back-to-back in March. If she doesn't, however, then that could open up a debate, perhaps some nuance into the rate path going into the March meeting. So a lot of the focus here is not so much on the decision today. Nothing is official, of course, until she announces it, but it really will be about the indications of March.
Maria Tadeo, never in my life have I been so cold as my days reporting outside the European Central Bank in Frankfurt. Why aren't you wearing gloves and a hat?
Can I... Listen, Matt, I feel, have you seen the movie The Sharknado? This is Sharknado, the German edition. The whole set is going to fly around. And this is with, what, 2 hours before decision making? So I still have a little bit here to go. But, you know, I take it how I take it.
I hope the tent stays battened down there and your space heaters are working. Maria Tadeo reporting from, I'm sure, an incredibly cold ECB in Frankfurt. Now, let's stay there, but move inside to a warmer setting. Deutsche Bank's profit and revenue fell short of estimates, snapping a long streak of market share gains and trading in the final quarter of the German lender's turnaround plan. Despite the rare miss, the CFO, James von Moltke, says he's optimistic about the year ahead.
Against our guidance for the fourth quarter, we're probably a little bit short on revenues, mostly in the investment bank, but against what was actually a record fourth quarter in our FIC business nevertheless. So it was a little bit of the froth in the very end of the year went away. We're still very pleased with the performance and don't see that as any signal about 2023. In fact, the momentum has really continued strongly into 2023.
Bloomberg's Manus Craney joins us now for more. So some misses there, but von Moltke seems optimistic.
Hey, Matt. Yeah, optimistic. Spreads have compressed. We're risk on. He thinks they're going to make more than the $28 billion that they had originally guided in terms of the full year revenue. The froth came off at the back of the fourth quarter, and that's where the FIC business perhaps underwhelmed ever so slightly. And if you look at the advisory side of the investment bank, plummeting by over 70%. I think where the disappointment in the market comes this morning, down 5% at one juncture and more, having bounced off the lows of the day, is the fact that there was no material shift on buybacks. It's just too early. So that leaves them lagging the UBS, the UniCredit story of buybacks anonymous, which has driven this banking market this week. Without an additional uplift on the buyback, there's just a bit of hesitation. Undoubtedly, saving, you know them well, along with von Moltke, they have transformed this bank from the problem child of Europe, which is now very much the Credit Suisse dog days at Credit Suisse. So the transformation is there. The return on equity is in. It's at 9%. The target was 8%. And that emboldens the view that you may get a dividend uplift coming to play soon. But I felt a hint of caution from von Moltke. They just didn't want to be bounced into the big buyback narrative that the rest of the market has. It's still the highest yearly profit since 2007, and the dividend was popped by 50% today to 30 euro cents. It is warmer inside the Frankfurt Bureau.
Do not tell Maria Tadeo, she'll be very envious. Bloomberg's Manus Cranny in the warm in Frankfurt. Thank you very much for that. Now, in other earnings news, shares of the Facebook parent Meta are soaring today. CEO Mark Zuckerberg is striking a new tone with investors.
I just think we've entered somewhat of a phase change for the company where we just grew so quickly for like the first 18 years of the company's growth. And it's very hard to really crank on efficiency while you're growing that quickly.
Bloomberg Quick Takes Alex Webb joins us now. I had to do a double take, Alex, of that pre-market move. For business such as Meta, for the size of Meta to move that much pre-market, double-digit percentages. I read one piece by one of our colleagues, Palmy Olson, this morning, says Zuckerberg pulls Meta back from the brink. What was it that went down so well with investors?
It was really the TOTEX. Total expenses going to be £5 billion lower than the market had been expected. You pair that with a less drastic decline in revenue that had been expected. The market had been forecasting a 6% decline. It was only a 4% decline. You put those two things together, slightly better revenue, lower expected costs, you end up with a situation the market has taken very well. To be clear, expectations were exceptionally low. So any sense of upside, and there was plenty of reason for upside, was clearly taken very, very well.
Okay, Alex, so Meta down, Apple, Amazon, and Alphabet still yet to go. All three of them reporting after the bell today. Quite a trifecta. What are we expecting?
It's really going to be in each case, looking on the outlook. Certainly in the case of Amazon, similar to Facebook, they'll be focused on how they're managing to rein in costs. They really opened the checkbook during the lockdown. Are they managing to rein in their costs? How is the cloud business performing? Microsoft's cloud business didn't do brilliantly in the most recent quarter. Is Amazon having the same problems? Going to be a similar narrative at Google. Is its advertising business holding up better than some of the others? Is it more resilient because people feel they have to be on Google search when they're advertising? And finally, when it comes to Apple, the expectations for iPhone sales are not as bullish as in other years. Again, any sign on the forecast for this year? How is resilience in terms of iPhone demand this year? Are they able to get all the semiconductors they need? Apple's got pretty tight contracts with their chip suppliers, which means they often get first dibs on supply. Those are kind of the issues for each of those companies.
Alex, thank you very much. Bloomberg Quick Takes Alex Webb with the latest on the tech sector. Coming up on this program, we're going to be discussing all of these themes in detail. Joseph Little, HSBC Global Asset Management Global Chief Strategist, joins us. We'll look back to the Fed. How has his thinking around rate cuts changed at all for this year, post the Fed meeting? We'll also talk tech with David Kirkpatrick, Techonomy founder and author of The Facebook Effect. Really great voice to have post Meta with that incredible pre-market move. Plus, how extreme bets fueled an $11 billion fortune. Today's big take story focuses on Michael Platt, his outsized returns and some harrowing losses. Look for that online or on the Bloomberg terminal. This is Bloomberg.
As governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Tuesday, President Joe Biden delivers the State of the Union address. Join David Weston and Bloomberg's top political reporters and analysts live from the Bloomberg headquarters in Washington, D.C., as President Biden lays out his plans to tackle the war in Ukraine, Congress's debt limit standoff, immigration, and more. And stay tuned after the speech as we break down the Republican response. Special coverage starts at 8:30 p.m. Eastern, simulcast on television and radio, only on Bloomberg, your global business authority.
Welcome back to Bloomberg Surveillance. We are simulcast on both Bloomberg Radio and Bloomberg Television, and I'm focused in on Adani right now. We're seeing the bonds absolutely tank across the empire. So a chart I've got up here shows green energy bonds, ports bonds, and electricity bonds all dropping down below 70 cents on the dollar. Meanwhile, a share sale has been canceled, a follow-on share sale to raise $2.5 billion because it was so deep underwater, and yet another bank says it refuses to take Adani assets as collateral for loans. Joining us to talk about this from a credit perspective is Dana El-Baltaji. She is Bloomberg's managing editor for credit. So, Dana, how serious is this for this gigantic business? When are we going to see a ratings downgrade?
My God, it couldn't get any more serious for a public company like this, to be honest, and especially since when you've got, I mean, you already have so much drama out there with the market cap tanking by more than $100 billion, but also at the same time, you've got bond coupons that are due today. So everybody's watching out to see if Adani Ports is going to actually pay off these coupons. There's no suggestion that it won't, but still, there's a lot of focus on this because there's been a lot of drama over the last week or so. And you're absolutely right. The next step is there going to be a rating downgrade? Some people have said that it's been rather slow. I think it might come soon.
Right, so those are some of the very here and now questions we're asking, watching this story develop over the last week. And it's been interesting to see banks reevaluating what they will and will not accept as collateral in certain circumstances, including Adani bonds. Let me move on to the Fed story, because this, of course, looms large over your universe, over the credit markets. We were talking about risk assets in general, responding to actions maybe rather than words at the Fed. Does that apply to credit markets? What have you been seeing?
Oh, absolutely. And, you know, I mean, the way that a lot of the market people are reading this, rightly or wrongly, is that we've had an entire year of extreme rate hikes, and now they've only hiked by 25 basis points. In comparison, that feels dovish. In reality, it's not that great for markets because, of course, the cost of borrowing is going up. But in comparison to the rest of the central banks out there, who we are expecting to see hike rates by like 50 basis points, the Fed looks dovish. And, of course, that has an impact on risk appetite. We are seeing risk appetite coming in. Recession risks are not being priced in as much as some people think that they should be. That could be good because some corporates can now come to the market and sell, and we've seen that. But it also could be bad because we also know we don't know what's coming, so recession might come.
Yeah, we've seen a lot of supply and a lot of demand, and we'll see how that develops as the rate environment tightens further. Thank you very much, Dana, for joining us. Bloomberg's Dana El-Baltaji with the latest on credit markets and some of the themes playing into that. For the latest on those credit assets, you can check out MLIV Go, the Markets Live team across those assets and all the others on the Bloomberg terminal. This is Bloomberg.
you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. The top names in global leadership are on Bloomberg.
I very much support the idea of a stronger sovereign geopolitical European Union. Democracies should cooperate, and that they should understand that there is something we have in common: respect for the individual rights of man, being in favor of the rule of law.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority.
Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Ukraine fears that a new Russian offensive is underway. According to the New York Times, Russia is assembling hundreds of thousands of troops in Ukraine. It's also stepped up artillery attacks. All this comes at a time when Ukrainian forces are waiting to receive tanks and other weapon systems from the U.S. and European allies. Israeli warplanes bombed parts of the Gaza Strip early today. Officials described the targets as a chemical plant and a weapons manufacturing site for Hamas, which Israel describes as a terrorist organization. That comes after a month of bloody clashes between Israelis and Palestinians. North Korea has shut the door on talks with the U.S. over its nuclear arsenal. Kim Jong-un's foreign ministry also pledged to respond to what it sees as threats from the U.S. After firing off a record number of ballistic missiles last year, North Korea has been relatively quiet to start 2023. It's only tested one missile so far. Coming up, we'll turn from geopolitics back to macroeconomics in the wake of the Fed decision of yesterday, ahead of the ECB and BOA today. We'll talk all things central banks and the market response with Joseph Little, Global Chief Strategist at HSBC Global Asset Management. That's coming up. This is Bloomberg.
what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Markets rally, even though Federal Reserve Chair Powell says more rate hikes are on the way. The ECB and the Bank of England are expected to raise rates today. Deutsche Bank's profit and revenue come up short. That's after debt traders' long winning streak comes to an end. And shares of Meta are soaring as Mark Zuckerberg promises a leaner, more decisive company. We will hear later from Apple, Alphabet and Amazon. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons over in New York. And Matt, European markets going higher, following on from the Wall Street moves post-Fed yesterday. But US futures also looking ahead to further gains.
Yeah, we have futures up right now about 0.5% after the 1% gain on the S&P 500 in the cash trade yesterday. The NASDAQ was up 2%. Jerome Powell can say what he likes about the Fed's moves later on, but if they're truly data dependent, obviously they really don't know what's going to happen. If we get a horrible jobs number, if we get a great CPI number, then they're going to have to pause or cut. So as a result, we see risk assets rallying today, investors buying stocks, buying futures, buying bonds. That pushes the yield on the 10-year down to 341.46. They're buying gold right now, which had already kind of rallied into this. A lot of these assets, keep in mind, have been rallying since October. So we've seen the market discounting this Fed dovishness for quite a while now. I think yesterday's meeting, the comments on disinflation and the comments on data dependence, the waffling on whether or not they discussed a pause, all confirming what the markets had been anticipating and why the markets have been buying. By the way, Bitcoin rallying as well, and this also, I think, is just discounting a Fed pause or a Fed pivot, and has been for weeks. We've climbed up, even since the FTX implosion, to levels higher than we were at before that. Now we're at 23,810, so I guess the next stop is 24,000. Kaylee, what do you see in terms of the pre-market movers?
Well, it's really all about Meta, as Anna alluded to. Massive, massive move in this stock for pre-market trading right now, up about 19% after it reported results. It had a smaller decline in ad revenue than was expected. It topped 2 billion active users. It announced a $40 billion buyback, and Mark Zuckerberg said 2023 is going to be a year of efficiency. So all of that seems to be music to the ears of both analysts and investors. We've seen a number of price target upgrades on the sell side, and investors clearly are bidding up this stock in a big, big way before the bell. And it's having a positive read-through as well to other big tech companies, including Alphabet, which of course that Google search business, also highly dependent on advertising revenue. So there may be a positive read-through there. It's up 4%, as is Amazon. Both of these companies, along with Apple, reporting after the bell today. So we still have a lot of weight in the S&P 500 getting set to report this afternoon. All of them, though, higher before the bell this morning, Anna, and that is lifting, of course, the broader markets.
Yeah, a real focus on tech then as we look back at Meta and ahead to those other numbers that are due out later on, as you point out, Kaylee. And technology is one of the sectors lifting European stocks today. So tech stocks going higher, partly the read across from Meta, but also some of the specific corporate reports around the likes of Infineon, Dassault Systèmes, lifting the tech sector here in Europe. The mining sector is under pressure, and that weighs on the London market, of course. Here's a sector in focus, that's banking. We've had a number of banks reporting here in Europe this week. Santander is outperforming the others today, up by more than 5% for the Spanish bank. The numbers coming in better than the market had been anticipating. Shell also delivering numbers that were better than anticipated, but topping that off with an increase in the dividend, an increase in buybacks, and that gave the investor community reason to send this stock higher. That as the company reports a record set of numbers for the past year, as you might expect, given how high we went on gas prices. The euro is at 109.84 as we wait for the ECB. Will they diverge from the Fed then with this 50 basis point hike? That is the expectation, given that the Fed only went 25. That's an interesting dynamic to think about, and we'll be watching euro dollar in amongst all of that then, Matt.
All right, let's get right now to Joe Little. He's a global chief strategist over at HSBC Global Asset Management. And Joe, you're joining us right in the thick of things here, post-Fed, pre-BOE, pre-ECB, you know, post-Meta, pre-Amazon, Apple, and Alphabet. What's your take on this market? Let's start with the Fed. Did Powell confirm the market's expectations that they're going to be forced to pause or pivot?
Yeah, thanks, Matt. So I think we learned a few things from Mr. Powell last night. Firstly, this idea of disinflation being very much noted for the first time, especially in the goods area, which has been coming through in the data now for a couple of months. The change of pace, of course, away from 75 basis point, 50 basis point super hikes, now much more gradual approach with these smaller increments of 25 basis points. And then the third thing that stood out was this focus around super core inflation, or what Mr. Greenspan used to call super core inflation. So we're going to be focused, I think, intensely on the services sector, wage inflation going forward for some signals around what comes next with rates. You're quite right, though. The markets jumped on this idea of the maximum flexibility, the data dependency, and I think that's what's supporting risk appetite in markets.
Yeah, and Joe, good morning to you. There's always a lot of event risk around US data, but given the Fed with those messages that you highlight, perhaps there's even more event risk surrounding the data that we get middle of February, for example, around inflation and other things.
Yeah, I think that's right. Maybe the important additional element to reflect on after Mr. Powell yesterday is that when you're data dependent and when the Fed is saying we're no longer offering lots of forward guidance, we're not providing a clear pathway for what's going to come next, there is discretion to policy. That means that the good news might not necessarily be good news from the perspective of the interest rate environment. Stronger growth numbers at this point in time can create further a challenge for the Fed, put them in even more of a policy bind, because it increases that concern around wage pressures, inflation becoming more entrenched, how central bankers talk about second-round effects. So I think it's a very difficult balancing act at this juncture. Some signals that we're seeing on leading indicators are already pointing to recession and risk of a downturn later in the year. There is a risk, of course, that the data comes out a little bit better, which might force the Fed to present a more hawkish message to the market. Some tricky issues to deal with.
Tricky issues there. Tricky issues at the Bank of England, no doubt, as well. We last time saw a three-way split in terms of votes on the MPC, the Monetary Policy Committee. We could see that once again. Which of the stories do you think is going to win out? I mean, this is going to be the 10th consecutive hike we see. Inflation running way above target, more than 5 times above target. But the growth outlook potentially being revised upwards by the Bank of England. Where do you think your focus is going to be?
Well, the data has got a little bit better. We've had some strong numbers on retail sales, the BRC numbers. We've had some stronger data on monthly GDP. But again, the stronger data almost makes the situation a little bit more difficult, because the bank then has to reflect very keenly on some of the strong readings that we see in the labour market or the strength in wages. Private sector wages are going at 7% now, Anna. That's going to be a real significant concern for many people at the bank. So our feeling is that we're going to see still a continued hawkish message from the Bank of England. We have a feeling that the peak in rates could be something like 4.5%. That message seems to have been endorsed by some of the MPC speakers, particularly Mr. Bailey at some of his recent presentations. And that means, of course, there's a little bit more tightening still to come for the UK. But it's very, very difficult because we know that the underlying pace of growth in the UK remains rather lackluster, stagnation-like, while we still see these high inflation readings.
Okay, Kaylee. Well, Joe, let's talk about Europe as well, because the growth picture has held in there much better than previously anticipated. How are you thinking about the ECB, not necessarily today's decision, but what's coming in March and beyond?
Yeah, so the ECB seemed to be a little bit behind at the Fed, maybe a little bit more aligned with the Bank of England in terms of the pace of the moves that they're making. More hikes is still a reasonable expectation. It's quite interesting that just as the inflation data on a headline basis is improving, we've had some better and better news on the inflation readings across Europe. The ECB language is getting a bit more hawkish. It's quite confusing, actually, at face value. But it's this same issue that the ECB faced that we've hinted at with some of the other central banks. The concerns around high levels of wage inflation, key point in the year now in Europe with the wage negotiations, wage settlements are going on. And the ECB want to make sure that some of that better news around growth, some of that those negotiations that are taking place behind the scene around wages, they want to provide a little bit of guidance, make sure that those pressures aren't becoming fully entrenched, more of a problem for the inflation picture. So we expect still a pretty hawkish tone to come through from the ECB. We have a target that's pretty much in line with where the market is saying at the moment of around 3.5% for the final destination for rates for the ECB. And it does mean that we should expect a continuation of hawkishness from the ECB. I actually think in many respects, the European issues are a bit more interesting.
Hello traders, how are you doing today? I'm going to place another order to sell short Bitcoin. I want to sell short another contract at 23,872. Okay, guys, if you want to trade Bitcoin, if you want to copy my trades, and if you follow me for quite a while, you know what I mean when I open two contracts and why I want to do this. So the 23,872. Please copy this trade and stay with me. Let's wait what's going to happen and how long it will take until we will fill this order. Okay, we're a bit away from actual price, but well, you never know, especially with Bitcoin, you never know what's going to happen. Okay, guys, stay safe, and I'll speak to you later. As soon as when we will get filled, I will guide you through what we're going to do next. Stay safe, guys.
And we've done some work
but
on
Joe,
this.
specifically on Adani here, they've lost $100 billion of market value in a week. You know, we're looking at some of the biggest institutions in the world saying they're no longer going to accept these assets as collateral. What's the fallout at HSBC?
Well, I can't speak to the specifics about that, Matt. But what I would say is that the opportunities in Asia for asset managers, for investors this year, taking advantage of the cyclical recovery, the boomlet in activity in Chinese consumption, which is going to reverberate right across the region, are really interesting. And it does look quite interesting, the fact that it's such a distinct, desynchronized global situation at the moment with a number of opportunities to play the cyclical recovery in this parallel world of how Asia is behaving relative to what we see in Europe and the US.
Okay, so the focus on the Chinese reopening. Joe, thank you very much. We appreciate your time. Thanks for coming in, Joe Little of HSBC Global Asset Management. Coming up, we will talk technology. David Kirkpatrick joins us, Techonomy founder and author of The Facebook Effect. What does he make of what we heard from Mark Zuckerberg last night and the pre-market moves in the share price? This is Bloomberg.
investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Currently, the monetization efficiency of Reels is much less than Feed. So the more that Reels grows, even though it adds engagement to the system overall, it takes some time away from Feed and we actually lose money. But people want to see more Reels, though. So the key to unlocking that is improving our monetization efficiency so that way we can show more Reels without losing increasing amounts of money. We're making progress here.
That was Meta CEO Mark Zuckerberg speaking on the company's earnings call. Shares of Meta are soaring in pre-market trading, up a whopping 19%, as Zuckerberg is striking a new tone with investors, saying the social media giant will be leaner, more efficient, and more decisive. Joining us now is David Kirkpatrick, Techonomy founder and author of The Facebook Effect. David, good morning. Thanks so much for being with us. Is it too early to call this a comeback?
Yes. I don't think we've seen it. Well, we've certainly seen a comeback in the stock. I mean, my gosh, it's double what it was just around a month ago. So, yeah, they hit a terrible low at almost 90 not long ago at all. And here we are talking about 180 going higher. So that is clearly, in financial stock terms, a tremendous comeback, historic even. On the other hand, they're still considerably less than half of what they were at November of 2021. And I don't think that the company's strategy has changed in the slightest. It's shocking how the metaverse continues an obsession. But something really good has happened to this company, and that is that it seems like Zuckerberg has decided to actually manage it as, a business, which ironically and oddly is new.
Well, and David, it felt like there was less talk about the metaverse and more talk about AI. How are you thinking about that?
Well, that's smart, and they have tremendous AI competency, as good as anybody. I think, we hear tons about OpenAI and ChatGPT. If Meta were to want to launch a product like that, I'm sure they have the capability to do so. It's obviously complicated, but they are extraordinarily gifted with talent in AI, and they're applying it in a lot of interesting areas. And yes, I think that's very important. The thing that was most interesting to me was this obsessive use of the word efficiency as sort of, the mantra. Zuckerberg loves to have a sort of very clear exhortative phrase that he uses for himself and to some extent for the company. And efficiency is the word of the year here, and it's needed. But the weird thing is, this was a company where money was flowing in like water for so long that they really lost the talent to just do what we would think of as normal business management. So now he's finally saying, oh, efficiency. Well, that is what most business people would normally think is important. But he's finally understood that. So there is another kind of turnaround there, I suppose.
I mean, he's trying to communicate, it seems like a cultural shift, David, because he talks about the first 18 years of operation, and they were growing like crazy, and they couldn't pay any attention to cost controls. But now, you know, they're going to wipe out this useless layer of middle management that they've been overpaying for so long and really focus on the business.
You got it. I think your tone is exactly right for that, too. But it is healthy, and you know the company needed it. So I'm pretty impressed, and honestly, as you know, I have not been a positive analyst of this company for much of the recent period. I still think there's a lot of key issues that they continue to disregard, in my opinion, enough, and that is that we to spend enough time on, and that is. In particular, disinformation, hate speech in the 100 or so languages they operate in. But again, they are applying AI to that, and it's helping.
Well, don't they need that, David? I mean, if Howard Stern stops making like potty jokes, no one's going to tune into him. The same is true for Facebook, right? They need to be a shock jock of social media.
Now you're sounding like Roger McNamee. You know, hate, you know, fear and anger are the things that motivate attention in social media, and they benefit from that. Yes. On the other hand, I would love to see them be a little more conscientious about how their systems affect society, and to some extent they really are. And they've been somewhat crippled in their inability to really stop it just because of their sheer scale, all these languages, etc. And AI is starting to help that. So, you know, it's great that they have AI, considering the scale of the challenge they have, moderating a system with 2 billion people per day. I mean, just think about that, how hard that is. And that is another landmark that we heard them talk about yesterday.
David, I'm torn. I want to move on to talk about other tech names because we have lots of companies reporting, but I'm so fascinated by the scale of the move that we've seen pre-market in this share. I mean, the things you describe sound really interesting and like they'll mean something to investors, but are they enough to justify a 20% surge in a share price in a day?
I can't deny it's hard to understand why the market got so excited about what happened yesterday. I think it was probably, even though they say they're going to completely continue their commitment to the metaverse, and they lost over $4 billion in the quarter on that area of their business, the Reality Labs segment, the fact that he didn't talk about that much, and he said his focus is on operating the business more efficiently, that was such a refreshing change that I think investors were very, very excited by that. But it is such a historic shift, you know, in sentiment that it's kind of hard to explain, really.
Okay, David, thanks very much. Thank you for joining us. Good to get your insights. David Kirkpatrick of Techonomy. Coming up, we will discuss more on the tech sector, tech market performers with ARK Investments CEO Kathy Wood. She will be joining the team at 3:30 p.m. in New York, 8:30 p.m. in London. This is Bloomberg.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody's talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kayla Lyons here in New York. Anna Edwards with us out of London. Now let's get a look at what's ahead today. Following the Fed's rate hike, investors are awaiting clues on the path ahead for the ECB and the BOE, which are expected to both lift rates today. Then U.S. eco data, including factory orders, initial jobless claims, and durable goods will come out. And then, of course, more big tech earnings ahead. And what is being dubbed AAA, Amazon, Alphabet, and Apple are all going to report results after the bell. So it's hard to know really where to look, Kaylee. I mean, we have the Fed, which we can obsess over ad nauseum. I'm sure, you know, the rest, we'll do that for the rest of the day. But then you have this Meta move, which, as Anna points out, is massive for a company of this size.
Yeah, 20% in pre-market trading, which makes me wonder if we're also geared up for some outsized moves for these other mega cap companies that will be reporting after the bell today. I mean, that is trillions of dollars in market cap, the three of them that are set to report this afternoon. So how much will it be those earnings stories that drive the market action for the remainder of the week? And how much will it be the central banks, considering we think we kind of already knew, for the most part, what the Fed was going to do, and they met our expectations?
If you can put together a dovish central bank interpretation and something strong out of tech, then that certainly seems to send the Nasdaq higher. It did yesterday, and it looks as if it will do again today. Matt, we're also focused on central banks, of course. I think, you know, the ECB clearly so important because of its size and scale. The Bank of England interesting because of the three-way split we could see. Really, our sympathies just all lie with Maria Tadeo, who is bearing the cold for us in Frankfurt this morning.
Yes, but also with FX traders, because we could see divergence that could drive some of these pairs. I'm watching euro dollar closely. I'm watching cable closely, and of course euro pound as well.
Yeah, absolutely. We went above 110 on euro dollar a little bit earlier on, even if it slipped just a little from that level. Now, that is it for Early Edition. Surveillance is ahead. They'll be hearing from Holger Schmieding, Chief Economist at Berenberg. Great voice to have on ECB Day. Stay tuned for live coverage of those central bank decisions and tech earnings. This is Bloomberg.
now you've been at JP Morgan for about 25 years?
Yes.
Okay, so, and now you run one of the most important parts of JP Morgan, which, as I say, is the asset and wealth management business. What actually is wealth management, and how is that different than asset management?
Great question. The two are often used interchangeably, but they have distinctions. The asset management business is where we manage money on behalf of individuals, institutions, sovereign wealth funds, pension funds. We manage them in mutual funds, we manage them in ETFs, we manage them in single stocks, single bonds, hedge funds, private equity, and the like. And that is the heart of the fiduciary business that we run here at JP Morgan. Wealth management is that plus understanding someone's entire balance sheet. So for the individuals where we manage money, we also help them with their mortgage. We help them with a loan that they might need. We help them with their basic credit card. And so wealth management is trying to help someone with their entire life, both their assets and their liabilities, their planning, their gifting, the legacy that they want to leave for their families, the 529 plans they need to prepare to get their kids to go through college. And it's a great insight into people's, entire journey.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
We continue to anticipate that ongoing increases will be appropriate.
This is a Fed that really has been pushing back, particularly on the easing of financial market conditions.
What the markets heard was this issue of the conflict between financial conditions easing and whether or not that would impact the Fed's policymaking.
If price inflation continues to come down as it has, it does open up a greater path to a soft landing.
People forget that you can have a recession, and while it's going on, you don't know you're in it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
The studio floor is actually quite comfortable.
It is.
Two pillows and position them appropriately. You can really make it work.
It's the blow-up mat that really I like.
We never left. It's a second home. Maybe this is home. From New York City this morning. Good morning. Good morning. We're back. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures positive again, TK. What a rally post-Fed and throughout the whole of the news conference yesterday.
Really history made yesterday. I really, John, think we need to stop and say, like, when I missed the data check mark there, you're going to the S&P, and I'm like, what? And there it was, 20 minutes later, boom, up we go, boom, up we go again. Thank you, Mr. Zuckerberg. And we go into huge news flow. How do you link the news flow of the coming 2 days to what we observed 2:45 yesterday?
Powell will have to face down and confront the data. That's the words of Andrew Hollenhorst, the city. The hopefulness will have to confront the economic data. I'd go one step further. There's a ton of research out there. A lot of people think the Fed is done now. Ellen Zentner of Morgan Stanley saying pause in March.
And
it's
she's
over.
4 3/4.
Well, and take it a step further, 50 basis points of rate cuts are being priced into the market by the end of this year. So not only is it done, but it's also preparing for the easing cycle. Did Jay Powell give enough to really support this? And I think that, Tom, you raised a good point. How much of this is short covering? On the other hand, John, the move is undeniable and it eases financial conditions further.
Okay, so I spent a lot of time thinking about this. We all did.
I didn't.
Did he make a mistake? Did he make a mistake? Did he make a mistake, and will he have to walk it back? He speaks next week with David Rubenstein at the Economic Club in New York. I believe it's next Tuesday. Did he make a mistake, or did he mean it? Does he just not care that much about financial conditions? It was Greg Robb from Market Watch who asked the second to last question, the penultimate question in the news conference. It was the perfect question. It was about financial conditions and whether they're worried about it. And Chairman Powell said, I'd put it this way, it's something that we monitor carefully. Financial conditions didn't really change much from December and that meeting to now. and your reaction was everyone's reaction.
It's just not true. You look at the data, he's just wrong. I mean, you're seeing bond yields down and you're seeing stock prices up. That is, by definition, easing of financial conditions. So that is not true. On the other side, perhaps the financial conditions didn't ease as much as it seems because he does see a deteriorating inflation picture as well as growth.
The market's rallying hard, Tom.
Yeah, well, the markets, I think, John, in the data check, you really got to look at the tech follow-through, if you will, and we've got the tech derby this afternoon. I believe there's 2 central banks that want to, do a Powell redux
the ECB
today.
and the BOE.
It's a quiet date calendar for the next 48 hours.
I'm not sure Lagarde wants to repeat that act in the news conference a little bit later. Looking at Meta, Facebook up more than 19% in the pre-market. It's the year of efficiency. We'll pick up on that in a moment. Equity futures on the S&P up 0.4%, a lift off the back of some big gains yesterday. In the bond market, unchanged after a big rally in the Treasury market, yields lower. We go nowhere today, 342 on a 10-year. And Tom, going into the ECB, euro dollar, very close to 110.
Yeah. I'm glad you go there. You go to euro dollar 110. I go to BBDXY, which is the great Bloomberg index, breaking down to new dollar weakness. It's now, John, 11 big figures, 11% move, and the dollar drawdown, if you will. That's a phrase I'm inventing this morning.
Nice.
Got copyright on it. It's great. But I really would suggest, John, seriously, that the meta news is good. We can do it later in the break, but $40 billion share buyback, which we didn't expect from young Zuckerberg.
Sure.
Do you know what that extrapolates out to with Apple?
Go on.
330 billion. That's how big 40 billion is.
We'll get Apple a little bit later.
Zuckerberg.
Elisa, we'll get numbers from the Federal Reserve. That's behind us. The ECB and the Bank of England in front of us.
So yesterday might have been the day of 25. Today might be the day of 50 basis points. That is the rate hike expected by both of the Bank of England as well as the European Central Bank. 7 a.m. we get that BOE rate decision, followed by a 7:30 a.m. news conference with Governor Andrew Bailey. Curious to see whether a hawkish tilt actually causes the pound to strengthen further or the opposite, right? At what point do we see this intersection of rate hikes and potential growth trajectory kind of coming together with a message that has been, for the most part, positive for the pound so far this year versus the dollar? But how much is this really a dollar weakening versus everything else and a risk-on type of story? 8:15 a.m. we get the ECB rate decision. The expectation is for a 50 basis point rate hike, right? But what does Christine Lagarde say at 8:45? To me, that really is the key to give a sense of how far they're willing to go, where the balance of risks are. Will she be clearer than Jay Powell? If she's talking about market conditions, if she's talking about the concern about which the balance of risks weighs more heavily on, will she come out and say, we are worried about inflation, period, full stop, and that might give a very different response to markets. After the bell, we do get Amazon, Alphabet, and Apple earnings. We get a host of others as well. But following on with what we saw from Meta, a very different picture from Snap. Meta, the year of efficiency, how much is this just job cuts, being able to cull all the fat over the past decade? Chalk it up to its rough times, focus more on the message. How much is that going to cause the pop in these other big tech names? You're seeing Amazon shares up 4% pre-market following on to what we saw from Facebook. Google also up about 4%, and Apple shares up about 1%, but building, John, on what we've already seen, which is a tremendous rally year to date.
Moment of silence, John.
What for?
Dan Ives nailed it.
Oh, sure, yeah.
Dan Ives freaking nailed it.
But he got it pretty wrong last year, didn't he?
Yeah, he got the whole year wrong. We don't care about that. But just here coming into earnings season, Ives was optimistic. And
who cranked the heat up in here?
Yeah, it's a little hot. We slept here.
It's
the
freezing
body
outside.
warmth all night. I brought Vetville and Kennelfie over. It was a little warm in here.
Jackets off. It is hot. George Saravelos joins us now, Global Head of FX Research at Deutsche Bank. George, let's start with the Fed yesterday before we move towards the ECB. What did you make of that performance in the news conference?
Good morning, John. So I actually thought he did a pretty good job. I'd make 2 points. The first one is he wasn't really dovish or hawkish. I thought he was agnostic. So he said, look, the market has a more dovish view on inflation. If the market is right, then maybe we won't hike as much. And if we're right, we will end up hiking. The key thing is if you look at real rates. So the real rate projection, both the market and the Fed has, is actually pretty similar. The difference is just on inflation. And I thought it was a pretty humble, so to speak, communication that we'll just have to wait and see. And we'll do what the data tells us.
George.
Sorry, go ahead.
Well, George, I think it's just so important to get to the ramifications of this. If we had a disinflation press conference, and if we break through some level, say 4%, what does that do to the dollar? It's got to be, do we get the mother of all weak dollars if we get a true disinflationary outcome?
Absolutely. We've been bearish on the dollar since the end of last year, and I think the last bit that's missing is this so-called Fed pivot, the yield curve, to start steepening from, at the moment, it's very inverted levels. But of course, it's not just about the Fed, it's also about what's going on in the rest of the world. Just one last point I wanted to make on the Fed this year. I think Kevin McCarthy is probably more important than Powell as far as the Fed easing cycle goes, and that's because of the debt ceiling. Now, when we look at the market pricing 50 basis points of rate cuts for this year, it's not just a view on inflation. It has to attach some probability to fiscal tightening, because if you look at the last two big fiscal tightenings from the US, 95, 2011, around the debt ceiling, this could cause a recession. So all the market is doing is it's just applying some probability to fiscal tightening later this year, and that's why you're seeing these rate cuts being priced.
I loved when Jay Powell was asked about the debt ceiling yesterday, and he was just like, I really have no interest in talking about this, kind of like the rest of us, even though we have to live with it for the rest of the year. George, I'm curious, pushing ahead until 7 a.m., when we do get the Bank of England rate decision, if they have a hawkish tilt with a 50 basis point rate hike, will that be good or bad for the pound?
So the key word with the Bank of England is this word forceful they've been using, which is to signal 50 bips increments. The question is whether they take that out or not. Our expectation is that they do. They signal the near end of the hiking cycle. I think if you look at sterling this year, the only reason it's been going up is because of a weaker dollar. The euro has been outperforming, and the much more interesting question is how much more hawkish can the ECB be? And it's here where I think the ECB is at a very different place to the Fed in terms of the messaging and the need to keep financial conditions tight.
So, George, what are you thinking here? 50 today from the ECB, another 50 after that?
So I think it's useful to take a step back, because ECB communication can be extremely noisy. But if you do, the European unemployment rate is at record lows. European core inflation is at record highs. Equities are at record highs. Wages are accelerating. Growth is sequentially accelerating. I think even though the market is pricing a fairly hawkish ECB of around 3.4 terminal rate, the risks are we go even higher. Even 4%, I think, is possible. Again, last year it was extremely difficult to convince people European rates could go above 3%. And again, we're seeing the same concern around how high can rates go. But I think the reality of the economy is actually very different and is supportive.
Hey, George, we've got to leave it there, but great to catch up with you, as always. George Saravelos there of Deutsche Bank. I think we've said this a few times on this programme. I certainly didn't believe they'd get anywhere near 2% over at the ECB, but here we are, Tom. We're talking about the potential of 3.
I'm still not comfortable with it. It's going to be very interesting to watch today, and I wonder if frankly, I'll be honest, folks, other than McKee, Leisman, and the rest, the question quality yesterday, there were some questions. I'm like, what planet are these people on? I'm not going to mince words. The ECB is a much better question quality, and I hope someone talks to Christine Lagarde about the nominal GDP overlay she has versus her monetary strategy.
I always think the day after the Fed for us is pretty dangerous because none of us have slept.
So just letting...
And we start to say what we really think.
Lisa was snoring.
Exactly.
I mean, you know.
Oh, yeah, it was my fault.
Have you got any comments on the quality of the questions in the news conference yesterday?
I absolutely don't. You want to pivot on that point? Absolutely
I like it when they follow up and they build on each other. I always appreciate that.
I said one of the Sterling people in the meeting, not McKee. I said, why don't you go for a third question?
Colby over at the FT.
Oh, Miss Smith. Yes, I went.
Colby Smith's fantastic.
I said, yeah, she's killing it. And I said to Colby, I said, ask a third question. Be rude.
Colby asked the question about the balance of risk in the news conference. It was the right question to ask, I think. If you'd asked that question of Chairman Powell maybe 3 months ago, he would have just come straight out of the bat and just said straight out of the gate, this is it. The risk of doing too little outweighs the risk of doing too much. Nothing else matters. Then we got this sort of like umming, this ahhing, and you pointed this out several times yesterday, Lisa. Once the umming and ahhing starts, it's just like bye, bye, bye. We're done here.
Literally, the more hemming and hawing he does, the more people are like, yes,
Can I suggest that someone that never looks at the minutes, maybe these minutes will be really interesting.
Well, he promoted them.
This time around.
He promoted them when he was asked, did you discuss the pause?
He DM'd me on Twitter.
You think he's going to read them?
No, Chairman Powell DM'd me.
I know.
Two-thirds of this committee will read the minutes.
Some of us, several of us will.
A couple of us might. In the next hour, Kit Jukes of SocGen. Equity futures up 4/10. The rally continues.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo.
Federal Reserve Chair Jerome Powell promised that the central bank isn't done raising interest rates, but markets rallied anyway. Here's what investors chose to hear as Powell's message, a more upbeat outlook on inflation. Now, Powell said that policymakers see a couple more rate hikes before pausing. Not long from now, we'll hear from more central banks. The European Central Bank is set to raise interest rates another half point. Investors will be focused on clues about where borrowing costs are headed next. Meanwhile, the Bank of England is likely to deliver its 10th straight rate hike. It may also underscore the risk that inflation will become more persistent. Ukraine fears that a new Russian offensive is underway. According to the New York Times, Russia is assembling hundreds of thousands of troops in Ukraine. It's also stepped up artillery attacks. All this comes as a time when Ukrainian forces are waiting to receive tanks and other weapon systems from the U.S. and European allies. Shares of Facebook parent Meta are soaring today. CEO Mark Zuckerberg is striking a new tone with investors. He told them the social media giant will be leaner, more efficient, and more decisive, with big assists from artificial intelligence. Meta posted fourth quarter revenue that beat expectations. And Deutsche Bank is promising to increase profit and revenue more this year. That's after the German lender snapped a long streak of market share gains in trading in the final quarter of a turnaround plan. Over the past 4 years, Deutsche Bank CEO Christian Sewing cut thousands of jobs. He also relied heavily on his traders for profits. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. As growth forecasts are increasing and inflation is falling, will the European Central Bank make its fifth rate hike in a row? How high do rates need to go? Bloomberg Television and Radio brings you the breaking news from Frankfurt and detailed analysis after ECB President Christine Lagarde's press conference.
The central banks, and certainly the ECB is pushing this line, have got much more wood to chop. They've got much further to go.
Coverage begins today, only on Bloomberg, your global business authority.
My role right now is to make sure we have a sensible, responsible ability to raise the debt ceiling, but not continue this runaway spending. This is a moment in time that for all American households, every family does this, every business does this, every state government, every county government.
Kevin McCarthy there, the Speaker of the House, live from New York City. Good morning to you. The White House calling it a, quote, frank and straightforward dialogue, saying it is their shared duty not to allow an unprecedented and economically catastrophic default the American people expect. Congress to meet it in the same way all of his predecessors have. It is not negotiable or, Tom, conditional.
Tom Brady stopped by while they had the meeting. It wasn't reported, but there he was. What is this? I mean, help me here. Was there even a photo op? There was nothing.
I knew this show would be off the rails today. I got no idea what that was.
This?
What are we talking about, this or Brady?
No, I'm talking about Biden and McCarthy.
Did I miss
I'm
something?
talking about Biden and McCarthy. I mean, how odd a meeting. The Speaker of the House, the President of the United States, should be a celebration.
Did you see
even if they don't...
the Ron Klain exit? Did you see that exit?
No, I missed that.
Yeah. Brought up the fact that the president would be running. The president still hasn't announced. I thought that was interesting. Look forward to being by your side in 24.
We're going to continue.
Whenever that happens.
We're going to continue forward here. It's a hugely busy day for Bloomberg on radio and television. And, you know, when's Bank of England? 7:00, John?
I believe so, yeah.
So we're going to do that in 40 minutes or so. Right now, we're going to digress. Emory Horton with us was something that maybe is lost in translation for our international audience, is our Bloomberg Washington correspondent. I'm going to cut to the chase, Anne-Marie. It is branded as Stop Woke, and it's a Florida law. I believe it's called HB 7, something like that. It's got a name. And this is, of course, Governor DeSantis. Can you explain what part of the Republican Party has figured out that education is the residence forward? Explain that story.
Well, I think you saw that very much so with the Virginia governor, who really leaned into making sure that when it comes to education in schools, that parents are really part of that conversation. And we saw Mr. Youngkin really lead the charge there, and obviously he won victory. And now you're seeing Governor DeSantis, he leans into a lot of issues that strike a nerve within the Republican Party, the conservatives within a Republican Party. And this has to go with his Stop Woke Act that he's been trumpeting for quite some time now, and really sets him up to be the leader of 2024 in the sense that he has Trump-like policies, but many say his delivery is a little bit more palatable.
I'm ignorant of this too, so help me out. What is the federalism of our education policy? Does Washington have a voice in what's riling up Republicans, or does it completely devolve to states and localities?
Well, if you think about it, a lot of what we have in education, there are federal mandates, but for the most part, it has to do with states. If you went to school in New York, you have the New York State Regents exams, and I say this because that's where I grew up. But obviously, it's different state by state, but there are federal mandates on what students should be learning, but states certainly have a lot of power.
Right now, we are talking about the debt ceiling, whether we like it or not, and there's an issue of whether this does mean a lot of reduced fiscal stimulus, or fiscal spending just in general, as well as a lack of a meeting of the minds. Have you been surprised, or are people in Washington surprised that Kevin McCarthy has managed to stay in this position for as long as he has and continues to negotiate?
Well, there hasn't been a big vote yet, right, on the debt ceiling, and he only just had his first sit down with the president. So they're trying to find common ground. I think many people understand that these two individuals are pretty pragmatic. They care about their future political careers, and both could be punished if there was a default in 2024, whether the Republican Party wants to consolidate power in Congress or this president. And John mentioned what Ron Klain said yesterday. He didn't say if you run, he says when you run for 2024. So they both understand that they need to get an agreement. But Kevin McCarthy, to your point, Lisa, is walking this tight line because he is beholden in some ways to the ultra-right of his party, who he was able to corral in the end to get elected speaker, but they have enough votes that if they don't like the negotiation tactics of the deal he's able to strike with the White House and the Democrats, then they're going to vote that down. But we're just not there yet. It's very much so the beginning stages of these conversations.
That's on the domestic front. What about internationally? Is there more of a meeting of the minds between Kevin McCarthy and the varied views that he represents and President Biden?
I think when you look at things like China, this Republican Party has set up a commission with a sole purpose to look at how to compete and how to really tame China and its influence on the United States. Items like these both agree on. When it comes to Ukraine, potentially we are seeing a little bit of cracks. Kevin McCarthy was the first one that said there wouldn't be a blank check. So far, we haven't seen the Republicans stop any of the aid that's going, but that could potentially be an issue down the line.
AMH, down in Washington, Anne-Marie, thank you. As always, the latest down in DC. TK still trying to work out when the president actually announces officially that he's running in 2024.
I have no pearls of wisdom on this other than I go, what is he waiting for? I mean, I don't see what the downside is, but...
Maybe wait for Document and Gate to get cleaned up? Do we wait for that?
That worked out yesterday.
It's not helpful to make an announcement if your next house is being searched, is it?
Okay, why is everything Gate? I don't understand why this sort of addiction
let it go,
to
Brahma.
sticking
It's all right, just let
Gate
it
on
go.
the end of things. I will say this, maybe he's waiting for February 7th to roll around, the State of the Union. Maybe that'll be a good time for him to announce. The other theory that I have, and this isn't just mine, is he's looking to see how much traction former President Trump gets in the election to decide whether or not to run, because it will matter how he angles his run depending on which Republican contender he's really facing off with.
Interesting. I think some people might share that view, actually, Tom.
I think so.
Are we done with that talk for 24, are we?
That was just absolutely
We can always talk about financial conditions in the Fed again if you want. We could do that all day.
Well, can we talk about tech?
I think he was a little miffed at the focus on financial conditions. I mean, the Bloomberg financial conditions.
We talked about it all week.
Was ever higher.
I don't care if he's miffed about it. That's what everyone wanted to hear about.
I heard some people, Tom, say he fluffed his
I would have
lines.
liked to have seen more discussion of as we disinflate, and Bloomberg had a wonderful banner up about that almost as a disinflation press conference. What does he do at 5% or 4% or 3%? What's the decision tree? And he alluded, they're talking about it.
I think he lent in, Tom. He did lean into this disinflationary trend that was starting to take hold. I thought what was interesting towards the end of the news conference is that he basically told you he wasn't here to change your mind about your own forecasts, about where you think the economy's going. And that really spoke to this spread between the Fed and the market. Now, when we talk about the Fed and the market, I want to be much more specific than that. We're talking about the spread between the market and the median dot in the Fed's projections.
Right.
Because Chairman Powell, I'm not sure, reflected the median dot in the Fed's projections in yesterday's news conference.
There are two ways to interpret, there are a lot of ways to interpret what happened yesterday, but there are two ways that I can think of. One, that Chair Jay Powell actually just made a mistake and that this was a faulty policy meeting. The other way to interpret this is perhaps he's seeing data that shows a greater weakening than perhaps he's letting on in
special
his rhetoric.
data, secret data.
Well, not secret data, but that their interpretation of it is more in line with some of the more, you're laughing at me, but more of the potentially disinflationary views.
I'll tell you why I'm
markets.
laughing.
Okay,
We always talk about the Fed this way. That they've got this secret pool of data. I know you're not doing that, but they've got this secret pool of data and they know things that we don't know.
Maybe I am suggesting
Think about how badly wrong their forecasts have been in the last couple of years. Do you think they've got a secret pool of data and they know things that we don't?
Somebody, and I don't have the note in front of me.
That's a fair point.
I don't have the note in front of me. The nightlight wasn't bright enough when we were sleeping here. But very importantly, somebody had a research note that alluded back to the early 1930s into 1954, which coming out of World War II, we went through two bouts of stunning disinflation down to deflation. We've had guests in this chair modeling sub 3% CPI. Is anybody there yet? And maybe that's the beginning of what we saw
I'll finish on this because we've got a long time this morning to talk about this. It is refreshing that he did just sit there and say, you're allowed to have your own forecast on things. I mean, isn't that the way it should be?
But that's exactly right. I mean, honestly, shouldn't markets have their own opinion and not just be tied to the apron strings of the Fed?
as governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Tuesday, President Joe Biden delivers the State of the Union address. Join David Weston and Bloomberg's top political reporters and analysts live from the Bloomberg headquarters in Washington, D.C. as President Biden lays out his plans to tackle the war in Ukraine, Congress's debt limit standoff, immigration, and more. And stay tuned after the speech as we break down the Republican response. Special coverage starts at 8:30 p.m. Eastern, simulcast on television and radio, only on Bloomberg, your global business authority.
Let's get you some price action this Thursday morning. Equities higher. How many times have we said that in 2023? Up by 0.5% on S&P 500 futures, rallying again on the NASDAQ year to date. So this is before today's price action. This is a month and change. The NASDAQ 100's up 13%. The S&P 500 is up a little more than 7%, 7.29% higher. This was meant to be the first half of the year was meant to be really terrible, and the second half of the year was meant to be great. So, you know, make of that what you will. Maybe the second half of the year is just tremendous. Who knows? In the bond market, 2s, 10s, and 30s looks like this. Your 2-year yield shaping up as follows. We are at 410.83. We had a break of 4.1% to the downside yesterday.
Yeah.
Big rally in Treasury yields lower. We are down to about 340.92 now. Tom, on a 10-year.
I think the 2-year yield there is really important in that it wasn't a breakdown for a cup of coffee. There was a sustained 409, even 408 going on there. And you really wonder, off the tech earnings today and off the central bank action, do we need to begin to frame a 3.99 2-year yield?
How far do you want to take it?
I did not think that 24 hours ago.
What did Don Constam of Mizuho said? It was always, by definition, going to look like a soft landing before it looks like a hard landing. Just in the nature of the way the data comes through, the survey data first starts to look softer, disinflationary trends, all that good stuff. Then we'll find out if it's going to be something worse than that.
We're pricing in immaculate disinflation. We are pricing in an immaculate soft landing experience that people say is nearly impossible. It is now the base case. And so at what point are we looking at something that looks very fragile and easily disrupted?
I'd go one step further. I think we've done more than that in the last couple of days. I think yesterday we priced out the Fed call. So for a long, long time over the last year or so, there was a belief in markets that the Fed put was gone and that if we rallied too far, the Fed needed to stamp down on that because we needed to keep financial conditions tight. The Fed call. That went yesterday. Chairman Powell was given the opportunity to execute. He didn't take it. So I think that the psychology around that story has shifted.
To me, the big question is going to end up being whether or not stocks have actually priced in higher rates in a really meaningful way. That is one of the big divergences, right? Are we actually looking at a market that is truly a market again without the Fed's real thumb on it? Or are we looking at something that still is incredibly influenced by the Fed and perhaps in the wrong direction?
It's going to be all about the data. Now, I know it sounds like Tom, but ultimately it is now, isn't it? It's going to be about the incoming information. It's going to be about payrolls. It will be about CPI.
February 14th, Valentine's Day.
All that good stuff. Tottenham, AC Milan as well. February 14th,
very
Tom.
important
That's the important stuff.
AC Milan is still
How much are tickets?
They lost 42 games in January.
That club, honestly, right now. Anyway, I digress. Can we bring up Meta? Meta absolutely flying in the pre-market after a revenue beat just yesterday. The stock is up by more than 19%, but it's all about the comms coming out of the C-suite. Mark Zuckerberg calling 2023 the year of efficiency, saying the following: we're working on flattening our org structure and removing some layers of middle management to make decisions faster, as well as deploying AI tools to help our engineers be more productive. There's going to be some more that we can do to improve our productivity, speed, Tom, and ultimately, and this is what we're rallying on, cost structure.
In the heart of earnings season, we're going to dive into technology right now. We do this with earnings coming out. We'll get to it in a bit here on Merck, Honeywell, and I noticed Snap-on doing better than Snap yesterday. But now on technology, we are so advantaged by Anurag Rana and Mandeep Singh there with Bloomberg Intelligence and have world-class knowledge here. Anurag, I want to start with you. There is this thing out there that the state of big tech of America is at minimum on pause, if not seeing better days in the past. You aggressively push against that. What is the American tech superiority right now?
It is the only, I would say, the superiority of the United States over the rest of the world, and I do not see any reason that will change over time. The question is, what do you pay for those stocks? And that's dictated by the 10-year, frankly. And that's the fight we are having. One thing we have seen with these layoffs is eventually the margins for these companies are going to be far better in the long run. The question is, how long do you wait for that?
Well, this is really important. What is your terminal value study? Have you your view out of what to do with Alphabet, what to do with Apple? Are you going out to a longer terminal value now, or have you brought it in with the new angst?
See, for me, it's always been the long term. But what happens is, companies like Microsoft or Apple, 1 percentage points of move here and there, and the stock falls down, 10%. And I think that's where a lot of the things is people are very focused on the short term. They're not looking at the long-term viability of these business models.
They're not all cutting. Apple hasn't cut in a big way. Do you expect it to stay that way?
See, once again, they didn't expand as much. But having said that, anybody can cut 3-4% of the workforce to, either get rid of the lower performers or trim a little bit of fat. To me, that's really not a big cut. And it's possible they do it today, but they didn't expand as much as either, Microsoft or Salesforce did during the pandemic.
So let's try to dig within the tea leaves that we have. And Mandeep, I'd love to bring you in to talk a little bit about what we saw with Meta and what could be applicable to what we see today after the bell with Alphabet, Amazon, and Apple. What are the themes? Is it cost cutting is going to be rewarded? Is it streamlining the vision? Or is it that advertising is more resilient than people had thought?
Well, so I think cost cutting will certainly be a theme. You saw that with Meta last night. Not only did they cut OPEX, they also cut back their CAPEX. And I think that is something that is a near-term positive. But for a company like Meta that is trying to pivot to the next version of their product, whether it's Metaverse or something else, cutting back CAPEX isn't great for the long term. But the market clearly appreciates, a discipline that the new CFO is showing. I think in terms of what Alphabet may say, the fact that they are more diversified on the top line should help, soothe concerns around the viability of, them compounding their top line at least, 10-12% for the next 2-3 years. In the case of Meta, I don't think ad spending is coming back at least in the next 2-3 quarters. So their top line will continue to be muted. It's all about cost cuts and the discipline they can show in terms of bringing back their free cash flow.
So, Mandeep, is this justifying the move that we're seeing in the stock? The fact that it's almost doubled since November 3rd of last year, that basically if you cut all the fat buildup over the past 10 years, particularly over the past 3, that's enough to justify pretty high-flying valuations?
Well, look at, how much of the bad news was already discounted. This stock went down almost 70%. So even if it's up, 80% this year, it still doesn't make up for the losses. And in my mind, I think the real concern is around the top line. What could go in their favor is a TikTok ban, clearly, or WhatsApp monetization. They talked about, click-to-messaging ads being a $10 billion run rate. If they can layer on e-commerce and payments to WhatsApp, that could be the growth driver. But otherwise, it's still a one-product company. It's relying heavily on digital ads.
I borrowed Anurag Rana's HP12C this morning and interpolated the extrapolation of a $40 gazillion share buyback at Meta. For Apple, that's a $300 billion plus equivalency. Is that the secret weapon profit-making big tech has? Is when it gets tense like this, boy, can they deploy cash to shareholders.
Yeah, I'm actually surprised that Microsoft didn't buy back more shares. I am really looking forward to Apple making a statement, buying back more shares.
Thank
and saying,
you.
I really am surprised that, we're going to publish a note today that says we want Apple to actually increase their buybacks by 20%.
Their dividends, we want them to have a higher dividend so they can be part of the Dow Jones Industrial Average.
I'm more keen on the buybacks given the valuation.
So is John Farrell.
The free cash flow is very large. Apple's going to generate about $100 billion in free cash flow this year, and I think they should spend all of it, if not a little bit more. And they're going to be far off from being cash neutral.
That helps you get that done, Tom. You just need a smaller price. That's how the Dow works. Just get a lower price.
They're going to develop 100 billion free cash flows.
You guys are going to have to sleep
Is Tim Cook CEO of the pandemic?
No, I wouldn't say that. I think Apple did well, but it didn't do as well as some of the other companies. Amazon, I think, did far better than that.
The stock tanked. People got killed there. Bezos was thrown out.
You're looking at the eyes of the stock. I'm looking at the side of the moat of Amazon is far stronger today than it was pre-pandemic. And that, to me, is far more important.
Talk to me about how well Tim Cook seems to navigate Washington, D.C. in a way that other tech companies just cannot. It's amazing to me that they're able to have these margins. They're able to have buybacks this big. They're able to assemble the iPhone, this fantastic product, overseas in China, and they barely ever get any political pushback. Why?
It's not even, I would say, he can navigate not even Washington, but China better than anybody else.
It's amazing to see.
He has not been touched. But having said that, he has to diversify away from China. It's just, it's just common sense. He needs to do that. And I think we're already seeing the rumblings of it. It's going to take time, but I do see over the next few years a lot more diversification of the supply chain outside China.
And that's what we've seen pretty consistently, Mandeep. I just want to really wrap up with this idea of layoffs and where they're really being focused. Is this just fat that has been developed, or is this artificial intelligence, ChatGPT, coming for our jobs?
I mean, I think I'll give Elon Musk a little bit of credit here in terms of showing how you could just cut, employees and the service is up. Twitter app is up. And that's the model I feel every tech company is trying to emulate in terms of, era of efficiency. I think that's where it's coming from. ChatGPT, I don't think it's going to be that profound in terms of impact on the number of people these companies have. So time will tell. But I think this is more about a near-term phenomenon.
Hey, Mandeep, this was great. Mandeep Singh, thank you, sir. And to Anurag Rana, who actually came to work today. Anurag, we appreciate it.
No, you're wrong on that. They can't be, no, John, they can't be they're so valuable they can't be together in the same building.
Is that right?
Yeah, it's a policy.
As opposed
Paul
to
Sweeney
us.
put that in.
We're
they
not
don't care
valuable.
about us. We're like, but no, Rana and Singh can't be in the same building at the same time.
Anurag, this was great. Thank you. Big day.
You're going to do this
tech
again,
earnings
right?
later. I'm sure he will. He loves it.
He
Meta.
just gave you death stare.
Meta up by 19% in the pre-market. What a run. On top of the gain year to date of 27%?
Yeah, so far.
Over the last month or so.
It's more than 60% since the low on November 3rd for
Wow.
the stock, just to give you a sense.
Well, it's a low
incredible
bar because
return.
we thought Mark Zuckerberg had lost his mind, right? And he was throwing all this money at the metaverse and renamed the company.
Right.
And we thought maybe he'd stick with it.
So getting rid of middle management is enough for everybody to come flooding back?
He's saying the right things, let's put it that way.
We didn't
so.
ask Anurag or Mandeep. Maybe it's a Mandeep question. Did the metaverse die yesterday?
I think he did his conference, his investor conference in the metaverse. I saw an avatar that he had created. So, but yeah, I think that the focus is on the one product, but then this really raises an existential question. What happens if people stop using Instagram?
I love our guests, but I'd love to go back and do a chronological SOT string of everyone's gloom. I'll let you pick the week.
What, on Apple?
The autumn. On everything.
Right.
Just, it's just stunning where we are after yesterday.
You just want cuts of Lisa.
Well, no, we could do that, but that's easy. We do that
Everything's going away.
The VIX is 17.60.
Yeah, I know. I'm shedding a tear. It's really bullish stuff. Equity futures on the S&P up 0.5%. Jennifer McKeown, the chief global economist at Capital Economics, and former BOE economist joining us ahead of that Bank of England rate decision.
Keeping you up to date with news from around the world with the First Word, I'm Lisa Mateo. Markets rallied after the Fed raised interest rates by a quarter point. Now, that's despite Fed Chair Jerome Powell warning that further rate hikes lie ahead. Still, he acknowledged that the U.S. economy is in an era of disinflation, with price pressures cooling. House Speaker Kevin McCarthy called it a good first meeting after his one-on-one with President Biden on the debt limit. Still, expectations are low for anything happening quickly. The president has resisted tying spending talks to raising the debt ceiling. Meanwhile, Republicans want steep budget cuts. North Korea has shut the door on talks with the U.S. over its nuclear arsenal. Kim Jong-un's foreign ministry also pledged to respond to what it sees as threats from the U.S. After firing off a record number of ballistic missiles last year, North Korea has been relatively quiet to start 2023. It's only tested one missile so far. Israeli warplanes bombed parts of the Gaza Strip early today. Officials described the targets as a chemical plant and a weapons manufacturing site for Hamas, which Israel describes as a terrorist organization. That comes after a month of bloody clashes between Israelis and Palestinians. And it's one of the biggest wipeouts in history. Gota Madani's businesses have lost $108 billion in a week after allegations of fraud by Hindenburg Research. The downfall also forced him to pull a $2.4 billion share sales to protect investors. Adani's company denies the claims. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
The UK economy has been hit by a big rise in energy prices. That's squeezing household incomes. The effects of that are coming through. Also a squeeze on company profits, many firms facing large cost pressures. The effects of that, plus the monetary tightening, is likely to cause the economy to go into recession during this year.
Great to hear from Michael Saunders there, the former Bank of England monetary policy member and Oxford economics senior policy advisor. I'll tell you a story about Michael Saunders.
Please.
Governor Carney takes over the job at the Bank of England, and Governor Carney goes up to the north of the country. I think he went up to Nottingham or something like that, and he did this speech. And he was meant to speak to a series of local businesses. And Michael Saunders at the time was at a bank down in the city of London, and Michael travelled up, sat in the audience, put his hand up, and actually got to ask a question. Carney spotted him. Then years later, where does he end up?
That's amazing.
Isn't that great, Michael Saunders?